Hello, everybody. How are we all doing today? Sup? Hold on, I'm just opening some more stuff here. Doing all right. This is just from when I was trading futures. This 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 bear flag is it's not a bear flag, but it's also not very relevant. It all occurred in after hours, right? Oh, maybe not. No, never mind. Not this one. Wait, no, it did. Yeah, this is all in after hours. This is the 30-second chart? 5-minute? There we go. Oh, okay. That's better. It was fun. I did pretty well on it. This drop, particularly after market closed, was fantastic. Got to keep retail from making money on the market dropping. Ready for default then 4,500. I mean, if the Treasury general account defaults, the market's not going to 4,500. I've been watching an Austrian dude stream his tractor. Okay. When Tesla under 100. That's what we're going to start with. We want to start with Tesla. Let's see. Tesla is sitting at... Don't fucking tell me. Bullshit. Sorry. Just about to tap Gamma Max, which is at 187.68. The high for Friday was 181.95. Gamma neutral came up throughout the week. Delta neutral fell off on Friday, 156.90. Yeah, I mean, I don't know what's going to happen here with Tesla with OPEX, but it's breaking up. It's still got a little room to run. Maybe... Maybe not. Could do straddles on it again. The last one wasn't very profitable though. I only made like 6% on it, so it wasn't really worth the exposure. But yet again, it ends the week at a resistance. 2 resistances. I just got home from sailing for 8 hours. Can we crash next week? I want this boat. Yes. Unemployment in the United States and the U.S. credit rating hopefully will fail in order for you to get that boat, Frosted Flakes. I wish for nothing else. I don't know. Yellen reiterated her June 1st expectation today, I believe. Still seems like that TGA is pretty slim. Upgrading my deck to Trex today. Flipping hot outside. I missed the snow that was here 2 weeks ago already. Idaho's more volatile than the SPX. I did ABS for the first time in years on my ab. I did abs. And my abs started cramping so hard I started screaming in the gym. I hope you had a great weekend. I hope there were a lot of hotties there when you were doing that. Just tell them you were trying to power through your set. SPX down Monday, or are we going to continue to push up? That's a very good question, and probably the thing everyone wants answered. Um, I don't fucking know. At least not right now. I mean, we started to fail into the end of the day. We do have, you know, kind of a breakdown from the highs that we saw going into Friday morning. Um, I like that we moved under resistance, but we're still really close to 4,200. Um, Obviously, futures tonight and into tomorrow morning will tell us a lot. Or nothing. I mean, if they trade flat, but I mean, SLD's technically not over, so we could still see a sell off. You know, maybe back to like the 4180 level, and then possibly a continuation with OPEC settlement. I do like that we broke down. You know, a lot of money was spent to push us up to like 4220, 4225, right into the JPM collar, and ultimately it failed. Right, Friday saw a significant amount of call selling come back in. So you know the bears became emboldened once again. And felt comfortable replacing their sold call positions. Obviously, the collars never moved anywhere. Where futures closed on Friday, we are below the hedged equity fund 3 collar again, below that 4190 level. That could lead to, you know, rising into those collars and then falling back out of them could lead to JPM selling off the like long futures hedge from the test of the equity fund 2 and 3 collars. So when we go above the collar, they go long futures, right? Now that we're both below both collars, we may see them sell them. What the heck are your expectations for GME this week? So I was hoping that Russell's first update on Friday would provide us with some idea of GME's positioning within the like Russell indexes. Unfortunately, I believe they only released reports for MSCI, so there's still no information for R2K or R1K. It can come now any day after 6 p.m. between now and the end of the period, which I believe is at the end of May, like the 31st. So, yeah, I mean, I guess we'll see. It's still illiquid. Like liquidity's not. Hold on, let me fix that. Where did it go? I gotta reopen. Sorry, I gotta reopen stuff. H. All right, so I mean, yeah, liquidity's still pretty stagnant. I think XRT still has a little bit of juice in the tank, but not a lot. Um, I mean, you'd think that we were ready to have a liquidity event based purely on this, but we may not be. It's tough to it's risky. It's gonna be risky to try to play it. Borrow rate's still down, so that doesn't look good. You think my QQQ 721 300 puts can get back to my cost basis at $3? I'm currently at 220. That doesn't seem unreasonable. You also have a ton of time. I mean, really, it wouldn't even need to drop back to the level you bought them at, right? IV would just have to spike. I was looking at the option OI Delta from here to next OPEX. Would all the calls being sold off expired allow for an easier downside now? Put OI is still up. I think so. A significant number of the calls that were on the chain Friday expired Friday. There is further dated call interest, but not nearly as much of it. Thoughts on debt talks moving past today's deadline? How does risk get repriced? We'll have to see if risk is repriced, but the 1 and 5 year CDS for the U.S. government bonds would probably go up and price in a higher probability of default. Institutions, would have to weigh that into their portfolios and de-risk appropriately. How much? Anyone's guess. We don't price in default regularly in the US, right? So it's been a very long time since any real risk of a default existed, right? Even now, as bad as the situation may seem, we're only pricing in like a 1%, 1 to 2% chance of default, depending on which metric, but it's low, right? It's very, very low. Should it be higher? Probably. That doesn't mean they're gonna reprice it. I mean, we shouldn't be pricing in inflation at 2.8% by September either, but or rate cuts by the end of the year, but we're still doing both of those things. Interested in cat seems to have broken out of the descending triangle. No, not. I mean, a little bit, but not really. You're just looking at a smaller descending triangle. Cat is still not looking very bullish here. It has serious resistance to the upside at 220. That's persisting. We're not seeing a lot of money move into Dow, so we're not seeing any big sector shift. Right, manufacturing does not look good from any of the current like central bank reports that have come out, like the New York State Empire Manufacturing Index is bad. Philly's Manufacturing Index was bad. Chicago's last report wasn't good, right? Like, manufacturing still looks to be declining, and costs are rising. So, Dow's been particularly unattractive right now. It's one of the reasons we see big money like flowing into tech as a safe haven instead of value. But yeah, I don't think this looks bullish at all. At least not right now. There was some plays earlier where I wanted to kind of catch any upside breaks, but outside of like small intraday opportunities on this, it still doesn't look very good. Not all descending wedges break up either. I was in Binghamton, New York last week for work. How does your state claim that godforsaken town? Also, my 2K to 100K challenge isn't going too hot. Is it under 2K? I don't know why Binghamton is part of New York, but most of upstate New York is kind of just there. I guess we needed farms. Thoughts on debt talks moving past today's deadline? June 1st military payout? Yeah. Interesting. Cat seems to have broken out of the descending wedge. I didn't play Clat's last drop to 207 since it broke support at 208. I mean, 208's not really a very significant support level. Like 203 to 200 is far more important. Now probably closer down to like 198. Cat still has difficulties with its like long-term valuations, but the bump and run failed. Um, so I think this still looks very distributive, right? I'm not saying in the future there won't be like another move to like 230, but I think over time this is gonna break down, and we'll see that like 160, 175 level again in the future, despite their phenomenal earnings. Um, no one seems to care. What does this break in your opinion? SEX price action seems rather ridiculous at this point. I mean, eventually, like liquidity is going to dry up. All of these runs have the same problem, right? All of they're not sustainable. Um, I think the better question to ask is probably like, when does this break down, right? um, at some point, it's gone on for quite some time. Uh, the upsides don't last, but they're still an issue. Obviously, the FOMC meeting in the middle of next month, and the debt ceiling deadline, both present significant catalysts, um, for more downside, than is anywhere near what's currently priced in. But I mean, the benefit of these pumps is that they're predictable and they're not sustainable. We haven't had any that have lasted for several days on end, right? They're about 2 to 3 days long. Liquidity dries up, and eventually they fail, and then everyone starts selling calls again. What would you say is your jab of spread selling? Something to master that makes consistent returns and is a good base for exploring more. I mean, spreads are like fixed risk, right? Understanding where and when to sell them, and then understanding how to manage them, or at least how to collapse risk in those positions is very important. But I mean, I make consistent returns selling spreads, uh, as is. I I don't know if there's like one fixed spread selling strategy that I use. I mean, like on SPX, I'll sell them at like point 0.1, point 0.2 delta, 0 DTE, and then usually close them by the middle of the day. But that's not really a defined strategy. I would say master learning to hedge them and position them. Uh, those are the most important. I mean, large sigma moves are very uncommon. So, would you remind me of what the red and green lines are? Was GME the green? Yeah, GME is the green. Will my 531 430 spy calls go in the money? 531 430 spy calls? Probably not. I don't see us getting up to 430 unless something really changes here. I mean, the Bulls just failed hard at even getting us above like 206, and we didn't even fill the gap from August, right? Which is really fucking bearish. Um, we saw pretty widespread capitulation of long positions throughout the day on Friday, both long and short dated long positions. Um, I mean, I would say that their at least their pump for now has been uh, the momentum's been significantly diminished. We may see more upside from here, but it's going to be grindy. They're not going to benefit from that negative gamma move. I mean, and really, if you look at it, right, in context, a lot of these pumps, if you go back and look at like where gamma neutral is, their ability to move above gamma neutral is very small, right? I mean, like under gamma neutral, the market maker is buying in to rising prices, right? But once you get above gamma neutral, the market maker starts selling in to rising prices, right? So of our improvement that was realized, 100 basis points of it was up to gamma neutral, right? And then from gamma neutral to the peak, we had 135, but then that failed, right? And then we closed the day only up 86 basis points above gamma neutral. So it becomes harder to continue to push up and more expensive. As we know, calls got very, very expensive, right? Which means that the returns on those calls are becoming worse. And then, that incentivizes put buying, which increases the VIX and volatility, which increases uncertainty, right? And we've seen that on all of these large pumps to the upside. Eventually, calls just are too expensive. There's no money to be made. And since a lot of this is like CTA driven, like commodities trading desk driven, and like futures traders, once their profitability in the position declines, they're gonna get out. I know they're out of the money now, but thoughts on Nvidia August 200p for a bad earnings play? Could be good. I mean, your theta's not awful, so you can benefit from any like downside volatility increase. Um, that's a really wide. It's a really wide strangle, but the premium could go up, and you're probably not front loading very much IV on that position, so the crush isn't going to affect you much. But I would make sure I would see how much they've priced up IV that far out. That's what almost 90 DTE. There's gonna be some IV crush, but probably not a lot. The market isn't pricing in recession yet until labor market finally takes a hit. I know. That's like the last leg of the bull case, right? Is that unemployment remains at all-time lows. I don't think that'll last much longer. There are some creative ways they can avoid a default without agreement, but like invoking the 14th Amendment. Um, I don't expect a default, right? Let me be really clear about this because everyone likes to get very carried away with all of this. My expectation is not for the U.S. government to default on its debt. My expectation is that more risk will be priced in of the potential for a default, right? Because we're really going to cut it very close, and obviously, like there are loopholes for the Treasury to use to extend things out a little further. There are executive branch decisions that can be made. Congress can pass, an extension. Um, Although I do fear that an extension would not happen in a timely enough fashion. So I think more risk of a default needs to be priced in, not that a default will occur. And that's why I'm looking at it. I'm not looking at it in the hopes that the US will default on its debt. That would be catastrophically bad. I expect them to use all the tools at their disposal. It's not a very good political play to blame the other side for a default. Defaults are just bad universally. How do you feel about the price for the SPX moving outside of your box? Does it frustrate you? Yeah, I do like to keep the price of the SPX within my box. But it happens. I mean, it's rare. Over the last, God, I don't even know how many weeks, it hasn't happened very much. Um, Obviously, once we cross above gamma neutral, though, things are kind of out of the window of prediction anyway. Fortunately, it did hit the long-term resistance and then fail. So it's still within the channel that it's traded in since the lower end of the channel it's traded in since October. $40.50 downs would be glorious. They would be. They would be. I would be very happy about that. I like the cat. Can SPX chop around in this upper range for a while before going back down, waiting on a catalyst? I mean, we're gonna have some catalyzing effect over the next few days. We have a few things actually. We have the whatever rollover from OPEX exists. Um, where we've got PMI data on Tuesday. Then we've got the Fed's dot plot on Wednesday. So, and then we actually have like a bunch of economic data this week outside of that too. I think we have PCE on Friday. PCE is a big one. PMI flash. We've got the 2-year note auction, which is kind of a big deal. I think we have corporate profits. Oh yeah, we have our second GDP estimate on Thursday, which is going to be important. Also, corporate profits are going to be out on Tuesday or Thursday as well. I think we have some like jobless stuff, but the most important data from this week is going to be the FOMC dot plot and PCE on Friday. I haven't had any scallops lately. How's liquidity on the Nvidia chain in August? I mean, the last time I looked, it was bad. That's why I bought September puts. How do you calculate call profitability? Why would I tell you? I mean, first off, you can use skew to determine the profitability of former calls and future calls, right? As premiums rise on the call side, but that's only part of it. Do you think a U.S. credit rating downgrade is pretty unlikely by S&P or Moody's in the next week if no progress is made in negotiations? It seems like it would lead to big downs. It's pretty unlikely, yeah. I don't think we'll face a credit downgrade, but I mean, if we have a technical default, we will, or a partial default. Biden says he does not expect a default, so doesn't that mean we're defaulting? No, he's not Jim Cramer. Where would be the new box? I haven't drawn it yet. I have to go over all the options data and stuff. We're still waiting on a giant BTU share buyback, right? When do you think they'll do that? Over the next 2 years? BTU is not like a short play. Don't get into it if you expect immediate returns. It's probably going to be several months to a couple years. But it's got good income off of CSPs and covered calls. It's a solid company, and their cash flows are phenomenal. Debt ceiling thing is always saber rattling. Usually, yeah. I think with Obama in office, Congress doofed around for 2 weeks before raising it or something. Says the guy who talks about cats and spaghetti a lot. My puts would like a dumpy doodle, but I should have positioned for a pump. I mean, you can't position for what's not there, right? It just happened. It took a lot of money to make it happen. It doesn't last long, but it's annoying as fuck. Assuming no drastic changes in debt ceiling talks or a decision this week, what would you expect the SPX to drop down to? Back to gamma neutral? I think we could fall below gamma neutral. I don't. I mean, it's not even that far. I think gamma neutral right now is higher. Also, son of a bitch. Gamma neutral right now on SPX is around. Nope, nope. It actually moved a little lower. It's 41.52. Yeah, it's like right there now. But yeah, we could still fall below that. Can you go deeper into what you look for to enter and open those positions? Thanks. I mean, they're pretty simple. There's not a lot of thought that goes behind the positioning of them. I mean, generally, I don't sell CSPs on stocks that I don't want to own. And then I don't sell CSPs unless I own, or CCs unless I already own the underlying. Um, I try to make sure that the market isn't trending violently in either direction. Um, Generally speaking, before selling them, I prefer a more stable environment, but that also means reduced implied volatility. Other than that, I mean, yeah, I just try to I try to ensure that they're on companies that I like or I want to own. I went to Rava. It was pretty delicious. That bread they give you in the beginning was awesome. Yeah, that place is pretty good. Morning, Hazy. I'm about to rewind the stream. I'm late, but thank you, Girk. You've taught me so much. 3x on my port since New Year's. Nice, McConnerberry. Congrats, man. Any thoughts on DVN share buyback? They're buying about 10% of their market cap worth of shares. Yeah, that's awesome if you own shares before the buyback starts, right? Share buybacks are great for long-term shareholders. But both of those like all of those like energy plays, they're not quick movers. They have dividends, they're definitely like buy and holds. Don't expect them to like fucking short squeeze or anything like that. Good afternoon, Girk. Longtime watcher, longtime caller. I have come to the conclusion I can't manage options. I'm looking at QYLD and XYLD just to start drip divs and feel like a good investor. Ugh. I'm sorry to hear that. You said Upstart needs a pivot in rates. They need a stable credit environment. But you said Upstart has a low chance of going below 15 again. What does that mean for rates in your eyes? I mean, it doesn't mean a lot, but they got kind of bailed out with the Castle Lake deal that just came through, right? Um, they got they got a buyer to come in with 4 billion to pick up their underwritings. That's generally something that would not happen outside of a stable credit market, right? In a stable credit market, their underwritings should be sold immediately, right? So somebody's going to want to pick up those assets. Um, but they kind of got the hookup. So that I think that's very beneficial for them in the short term. It definitely helps their survivability if we're facing any kind of drawn out recession or increased rate hikes from the Fed. I think the Fed has almost unanimously, outside of Jay Powell's speech on Friday, said that they intend to move forward with probably another rate hike. So I mean that puts us out till you know at least summer before we see any kind of pause or pivot. A pivot's best because a pivot, not only stabilizes credit markets, but it also incentivizes people to go out and get loans, right? Because rates will be dropping. So more people getting loans, more people buying loans. Those things are good for Upstart. Right now, the credit market is still illiquid, and we're still experiencing a credit crunch. I expect that's going to continue for some time. I think Upstart's valuation is up. Their book value is going to go up with that purchase, or well, that with that agreement with Castle Lake. Right now, they're floating a significant amount of their outstanding loans on their balance sheet, and that is going to allow them to get those loans off of their balance sheet, which then raises their book value. In your experience, is it possible to loosely manage a straddle and still be profitable? For example, entering each leg with a 15% trail and letting each ride. I mean, you can close your straddles. Well, here, you know what? The best way for me to show you this is just going to be to set one up and show you what it looks like, right? So say we're buying like let's see, SPX closed it. So 4090 straddle. Um, we're gonna do like May 31st, right? Now, if you look at it like this, the profitability is very minimal unless you get 100 basis point move, right? To close both legs. Or there's an increase in volatility. So the downside can be more profitable faster because it doesn't take like a big bump in volatility. But if you look at them as individual legs, right? You only need like a 30 BPS move to close the call side, or alternatively the other way. So yes, you can just sit on it and wait till you see that range of movement and take your 2 to 3% yield. But it's much easier to do it like this, where you kind of look at it as you have a call and a put. At least right now, while the market remains very high on realized volatility, and IV remains low. But yeah, I mean, you could. I don't know if a 15% trail stop is sufficient. It's okay. I mean, it can take you out. Let's see, this is 11 DTE, right? And this, so a 15% trail stop would get you out to about Tuesday morning from Friday. If you go shorter dated, profitability can be realized a little faster. But yeah, I mean, generally speaking, I'm just selling them as they go in the money, and then so the calculator is not very reflective of that unless you exclude one leg or the other. So if SPX opens at 220, right on can I get 220 on here? Right, then I can take 46% off the call side. I can leave the put floating, right? And it's down 54% at that point, right? But then I can average down the put on the rejection. So say I buy another put at so I'll have two at an average price of 14, 14.25, right? And then under 4,200 you can take profits, or actually 4,206 you hit profitability on the put side. In your experience, is it possible to loosely manage a straddle? Asking because sometimes I can't manage positions throughout the day at work. Do I just need to be more strategic with my conditional orders? Or should I just trade spreads or something else? I mean, spreads seem better if you can't manage, or like condors or something, where your risk is fixed. Straddles, a lot of your hedge is your active management. Thoughts on just doing consistent boring plays on futures contracts every day? I've been paper trading average 4 to 500 a day versus negative 4 to 500 a day on zero DTEs. You could, yeah. I mean, you're playing what's relatively the same price action. So if you're winning on futures but losing on zero DTEs, I don't think it's the instrument's fault. It might be how you're managing the instrument, right? I'm planning to scale into a decent DVN position under 50. Do you typically sell CCs on those types of dividend yielding buy and hold positions? I try to, yeah, if the opportunity is available. It isn't always, but yeah, I generally try to sell covered calls on them. DVN's okay. It doesn't have great covered call returns, but it's okay. It can add to the yield. I don't really know how much it says about AI. It doesn't necessarily say a lot about macro either. But Upstart's producing loan volume, and people want those loans, right? Those loans are being currently written at very high interest rates. There's going to be buyers for that, so it's good for Upstart. I don't really think it says anything about AI particularly. People are willing to trust the results, which is good. By the time the Fed pivots, the shorts will be massively underwater. When squirting, what's to say the shorts won't just be out by then, right? What's to say that the shorts won't just start, now with the Castle View deal on the table? What's to say they won't just start slowly closing out their positions over the next, 6 months without any significant effect on price action? Maybe some continued bumps, but I mean, Shorts don't have to squeeze to get out. I've logged in and out twice and still shadow banned. Fuck me. I can see you, Dave of the Pigeon Wheel Daves. Your words, they appear to me. Explain toe rings, like just why. I don't know. People like to be uncomfortable. I don't know why Turdford doesn't just tell us what K McCarthy's XPX position is and we buy accordingly. Easy. Why would Turd know that? What happens to money market funds in the case of a default, like SPACs? That's a good question. I don't know. How exposed are they to US treasuries? They have like a. I can only think of like one time that there was a default on like money market funds. It was like in '08. Right? Yeah, I think it was in '08. Their NAV fell or something. Unlikely. Yeah, no problem, Flocala. Yeah, I don't think having an ETF spreadsheet is going to tell you what Representative McCarthy's position on SPX is. I don't think it matters. I don't think he has enough power within his own party to facilitate an agreement to any kind of successful negotiation. Anyway, I've asked this before, but I don't think I understood. Is it strange to see a small collar ETF consisting of flex options to be on reg show? What does one achieve by shorting a collar ETF? Hmm. I don't know what their underlying ownership is. Probably not. I mean, any failure on an ETF will get it on reg show. It doesn't have to have like a huge amount of them. There's simply just has to be a naked short position that's unresolved. But it would depend on the underlying holdings that allow them to create the collar. No, reg show doesn't crush IV. You hear that Kava's going public? Don't tell Gaff. Is default same like our puts MOASing? Yes. Yeah. Even a technical default. Or you don't need a true, sovereign debt default. You can just have, Treasury can't issue any more treasuries. Right. Debt ceiling hit, done. Right. That's all it takes for a technical default. We've had a few of those in the past. We've never had a true default on our debt. Let me see if 2011 was the last time. Yeah. There were about three others before that too. I haven't seen any mention in the pickle jar that SPX wicked above the Bollinger Band on the daily. Someone else pointed out that immediate big downs ensued the last time this happened. Is this significant? No. I mean, Bollinger Bands aren't significant. But, I mean, sure, a failure to break above the band is, bearish. Did you get a read on the 4200 Cs coming in for 12.15 on Friday? No, I don't know if they're bought or sold. It wasn't that many of them. I'm just hoping for SPX will have 4170 on Monday, or I'll have to close or roll my Monday spread. Right now, based on futures pricing, it should be just around 4180 SPX right now. Mac, Roe, and Cheese. Interview with the Vampires, a 1994 film about Paul Krugman, Richard Grasso, and their international band of married pranksters. Jesus fucking Christ. I still think we're about 5 weeks away from possibly an official recession, which means I think that unemployment rates will rise in the next. I think the labor market's going to soften in the next 5 weeks. We're likely to see more action from the Fed coming into their FOMC meeting, and that's 3 weeks away now. And then obviously it doesn't look like we're getting a deal on the debt ceiling before Yellen's deadline, which I still think is overly optimistic. Thoughts on Apple being able to buy the UK? They should. Then they don't have to tax themselves anymore. Market cap not same as country. Is there any other questions before I get like Dork and J Fresh on here? And we go off on an extended tangent about hypothetical market scenarios. Do you still trade the underlying ETFs to SPY? You mean SPX? Or like, are you talking about like SPX, like leveraged ETFs? I still trade SPY once in a while. I have SPY spreads out right now. I have like a huge like debit spread position on SPY right now. Just because I wanted to be able to scale it more effectively, and I wouldn't be able to get as much leverage on SPX with the same ability to scale out of it. Has your kitty started paper trading? No. Although he did tear up my mail. Fubo OPEX? Not likely. Pretty liquid. both Fubo and Upstart have realized quite a lot of liquidity over the last couple weeks. GME is one of the only ones that remains persistently illiquid. I mean, like the underlying sectors that make up the S&P 500. I mean, I didn't start that way. I I don't. I mean, I still trade sector rotations if that's what you're asking. I mean, trading indexes is a big part of being like a full time trader. Yeah, you could also trade FX or futures, but um, yeah, index trading's a pretty big part of being a full time trader, regardless of the instrument you use. I wouldn't say that I ever traded a lot of the underlying ETFs. Some of them. I mean, I used to trade a lot more leveraged ETFs than I do now when I had a smaller account. But SPY and QQQ are sufficiently small. Can you pull up MNK? I might short this. Why would you touch this? It looks like it's short squeezing. You wanna get buried? You think it's done after one day? Maybe. That'd be awfully quick. Volume rose consistently into close. That's not really indicative of it being over. Also, don't you have to like actually short it? I assumed you shared your thoughts on the hard pump last week and its possible continuation. Yeah. I mean, it wasn't that hard of a pump. It was under 200 basis points by Friday's close, right? Could have been a lot worse. Or just over 200. But it's not like we moved like 3 or 400 basis points or anything. Do you like 4500p, 3950p bear spread on SPX as big down insurance? It's 50x, 4500p. So you're selling a 4000 and buying 3950, or is it debit? How does the 14th Amendment work? It just removes the debt ceiling, basically. I mean, we really shouldn't have a debt ceiling. No one else does, right? It's just an arbitrary point of contention anyway. Yeah, I wouldn't fucking touch it. It looks like it could still go up. NVTS. Semiconductor Corporation. Okay. I mean, it seems like they found a level at which long-term buyers are willing to sell. Doesn't really have a lot of price history. It only goes back to 2021, but it's definitely at resistance right now. Has been for like 3 days, 4 days. And 4 days of failing to break this level is not particularly bullish. I don't know what news there is on it or anything, and their profit margins don't look good. It looks like their net income is falling off pretty hard. But I don't know anything about the company. Alright, let me see what...
Lower delta, you lose on that delta.
What's up, nerds?
Yeah, that's what I was saying. The delta hedge position might be favorable.
Yeah, we'll figure it out.
Yeah, for sure. What's up, Dirk?
What's up, man?
How you doing?
Doing alright.
Yeah?
Yeah.
Trying to find some good Street Fighter games, or was everyone trash?
No, I finally found people that were better than me. I just had to play ranked.
Oh, nice.
Yeah.
Right on. It's always fun when a game's a challenge.
I've gotten old and bad. That's the two things I've noticed. It's really making me feel my age.
Yeah, I feel like that when I play first-person shooters, dude. Like playing against a bunch of like 11-year-old Zoomers with massive ADHD and razor-sharp reflexes, getting wrecked.
Yeah.
Yeah. I'm an old man, so I was like, all right, I'm just gonna stick with single-player games.
Yeah. Zelda's been pretty nice.
I got the new Star Wars game with that Ian kid from Shameless as the main character, and the hardest difficulty is actually really fucking hard, so I've been enjoying it.
Yeah, the game looks sweet.
Except it locks up a bunch on the PS5, so I'm kind of like the new patch made it lock up like 4 times on me in a day, and I was like, I'm just not going to play this till they release a new patch for the PS5. Anyways, what's the word on the street in the comment section of the Dillionaire stream?
One more before we get into markets. One more thing that made me feel old this weekend. Somebody in the Discord was complaining that video games are being the prices are rising from $59.99 to $69.99.
I remember
it reminded me back in the day when Chrono Trigger for the Super Nintendo retailed for $79.99, and we bought that shit.
Yeah, like it was going
with no hesitation. Yeah. So, but they were complaining about inflation in video games, and I was like, I don't know. I've seen the opposite trend. They've kind of just turned the video games into, this lifeless, spiritless, shitty commodity that just gets crapped out everywhere.
Yep. The most successful games have the best microtransactions.
Either that, or they have some sort of revolutionary new game, like gameplay dynamic. So like Minecraft and the the real sandbox open world thing, like it was wildly successful, but it was a full on indie game, right? Mojang wasn't like a thing before Minecraft. So there's definitely like there's potential.
And then they got bought out by Microsoft, and Notch lost his mind.
Yeah, exactly. Yeah, that's the destiny of all great indie game developers, is they get bought out by a massive one, lose their soul, and then have an existential crisis and become something that is nowhere near recognizable to the original.
The only person left defending gamers' rights to cheap games is Gabe Newell.
Gabe Newell's the man, dude.
He's kind of, I mean, I hate him. He's a piece of shit, but he's also just kind of a boss.
That's what
I
I mean.
don't want
You're gonna
games to
like
be cheap.
someone to be a man.
I'd rather just have a really great game. I'd rather have like in a year, 2, maybe 3 really great games than like, half a dozen to a dozen mediocre games. It's like we already have enough mediocre games.
Yeah, but they have to release games for everybody. What you think is completely subjective, right?
Yeah, it's true. I don't know. It's like peak television, there's more television being created every minute than there are minutes in your life to watch them.
Yeah.
You'll never be able to watch all of the content being created. I feel like that's happening in games.
You just have to watch it on 2x.
Well, I think I told you guys the future of gaming in my mind, right? In the age of AI.
Oh God.
So what you do is you have
Here we go. AI. Let's go
you have your
into it.
generative AI. So the generative AI is the game, right? The generative AI, make me a Battlefield game based in Vietnam, and give me a 20-minute single player mission, and it'll make you that game. It'll be a completely unique mission based on Vietnam.
Yeah, it could do that.
I mean
Yeah.
I mean there could be some there, but that sounds like it would
I don't
be
think developers will ever let that happen.
developers. That doesn't sound like
Because you're going to be like, oh, there's not enough tortured POWs in this. And then the generative AI is going to make you a bunch of tortured POWs. And then you're going to post it on Twitter and you're going to be like, look what this game made.
Yeah, I made a single player mission where I burned down an entire village and killed families.
Yeah.
Yeah, there's definitely more that like AI moderation is going to be a huge step for the whole thing, really, like because of that kind of shit, right? And that's why like Chat GPT is so limited, you know?
I think we need to take a step back, and I truly believe, and I'll probably be proven wrong, and I don't care, but I believe at this point that most of the posturing around we need to create rules to protect us from AI is subversive marketing to say like this is really powerful and it's going to change the world. And
Except
it's just
Elon,
kind of
because
bullshit.
I think Elon pulled out too soon, and he needs a break so he can get back in. He's like, wait, I didn't know it was gonna pump this hard.
I've never heard of Elon pulling out too soon. That's interesting.
Right? I mean, it's definitely not in his wheelhouse.
Sorry.
No, that's an acceptable conclusion to come to. But none of the AI developers have any tiny horses, so.
But they do have secretaries.
That's true.
Speaking of AI, part of the pump on Nvidia this week, other than just no reason at all, was because they released their new series of cards. Some like 40 something. I don't know what all they do.
Yeah, the 4060, yeah, the budget series.
Yeah.
Tuned up 3090s. Because don't forget, they've hit the peak of processor development. There will never be a better chip. That's why Nvidia is no longer a video card company.
So riddle me this, right? We've had three major tech companies come out and say they're fabbing their own chips, right?
Yeah.
Which really reduces Nvidia's market share. And the thing they said was going to 1,000,000x, 1,000x soft goods factory cranking. So why is it still overvalued? I don't get it. Why it hasn't pulled back at least a little bit on that news?
Because ETFs haven't pulled back because the market hasn't gone down.
Yeah. So speaking about the perfect card has already been made. Here's from Nvidia's press release. The GeForce, is that what they call it? G or GE? I don't even know.
It's GE generally. GeForce.
I'm gonna call it the GeForce, so people can just be upset about that. The 4060 Ti is on average 2x faster than the 2060 Super and 1.7x faster than the 3060 Ti. Now that's with their their generative AI enhancement, whatever that is. I guess the AI just guesses what the higher resolution should be. So for titles without frame generation, the RTX 4060 Ti is 1.6x faster than the RTX 2060 Super GPU, and then they just leave out its performance compared to the 3060 Ti.
Here's
Because
here's the biggest
I'm assuming
problem
it's either not
is
faster or
is
it
that
might
you
be
like
slower.
right now, like the upper cap for gaming is 1080 1080p to 4K, right? And you only, I mean, most gamers are perfectly happy playing at 60 FPS. So you, you know, they can keep upgrading cards, but like the games aren't becoming better at the same rate, right? And the resolution those games can be displayed in also isn't getting like significantly better at the same rate. Like no one like there isn't a huge swath of the population actively trying to play games in 8K, right? No one gives a shit.
Yeah, no.
Like most people are still fine with 1080p, and they don't need to upgrade their cards for years.
I mean, shit. Like right now with Zelda out and everyone going nuts about that. I mean, the screen on the Switch is 720, and it's like the size of a phone.
Well, hold on. I have the OLED Switch. Is that better, or is it the same?
Yeah, it's better, I
Okay.
guess. I don't know. I mean, it's a better screen. You'll get better contrast, but I mean, most people you get 1080p if you plug it into your
TV,
television.
right? Yeah.
Yeah.
And no one gives a shit.
Yeah, it's not like the Switch is selling Switches and selling video games on the hyper realism in their graphics, right? I mean, they're
Yeah.
just fun games that don't look like shit.
That's Nintendo's mission objective, man.
I mean,
Fun games.
that was like something that indie game companies took huge advantage of too over the last few years, right? Is that video cards were so expensive, so why just let AAA studios develop on like the latest hottest video card, right? And they could just develop games that people can play on anything.
Yeah.
But I mean, like I have a 3080 Ti, and I'll be sitting there playing like TFT or even like brand new titles like Street Fighter 6, and it's like I'm running the game at 160 FPS in 2K. I don't need better resolution. Like I don't ever need to upgrade this card. I mean, like not for the next like 5 years. Now I want to upgrade it. Like don't get me wrong, but I don't need to.
Yeah. So Nvidia sitting at what 29x sales.
Yeah, I mean that's okay. They'll do it. They'll pull it off, right? Jensen definitely has a place in a plan in place to increase profitability 500 times over their Bitcoin uh, pandemic highs, right? Like when crypto mining was surging and everyone was buying a PC to play video games during the pandemic, they'll totally be able to beat that by 500x, a million
with their
x.
AI chip
Yeah,
manufacturing that's getting
yeah, with
taken
their
away
AI
by
products that are open source that no one wants to buy.
Yeah.
Yeah.
Microsoft, Google, Apple.
Yeah, even though they're in direct competition with every other
even
major
even
software as a
Amazon.
service company.
Even Amazon is starting to get into making chips, right? I mean, there's nothing magical. I was kind of doing some digging out of my own curiosity of how these chips are arranged, compared to conventional CPUs, et cetera. And there's really nothing magical about it. It's basically just, do you want your transistors to be in series or in parallel, or in what combination of those two things do you want to arrange them? And then what kind of precision do you want? Sort of related to that is, what kind of precision do you want for your calculations? And for AI, the precision can be lower, and so you can do more calculations with less precision. There's nothing super magical about it. I don't know. I'm still not quite seeing it. I know people are trying to give AI the benefit of the doubt, but it's still, the explanations that I'm receiving still just aren't quite bridging that gap between hopium and like a roadmap, right? You go and look at like
I
IEEE.
currently see no route to profitability in
That's
generative AI.
well, that's the thing. Like you go to like IEEE's roadmap for semiconductors. They have like a 10, 20-year roadmap that's like, multiple dozens of pages long, and that's like been heavily summarized and made readable by folks, made by like, everyone in the industry and folks in research to kind of come up with where is this industry going to go and how are they going to get there. And you look at the level of detail and you're like, okay, this is what it's going to take to go from 6 nanometers to 5 nanometers to 4 nanometers. This is how much money. This is where it's going to go. This is what this is where the demand is that's going to justify it. And then you look at all the AI stuff and everyone's just like, oh, it's going to change the world, and everyone's just crazy about it. And it's all fluff, and I don't buy it yet. I want a roadmap. Someone give me a roadmap.
Well, like a roadmap for
I mean,
the
Jensen
product,
did in the
roadmap.
earnings call. They're gonna take the hard goods. Hold on. They're gonna take the hard goods and they're gonna put it into this metaverse factory, and then that's gonna crank on those hard goods until they become marketable soft goods.
I hate you so much right now.
So okay, so Jake Fresh, give me a second here. I'll explain to you like at least
Maybe
a little
AI will
bit.
cause the unemployment. Sorry, Dory.
But it'll kill middle management. So here's my vision for AI as like a software engineer. Let's just say. Okay, so um, I do work with DSPs, right? Digital signal processors, right? And a lot of other people do too. There's people in like laser stuff and all kinds of different cool industries. But let's say we need to develop a DSP for some new application, right? Normally, that would require a specialist who knows how to program DSPs, with things like impulse response filters and all that. But let's just zoom out to like to make it more palatable. We'll talk about like audio because I'm an audio guy. Instead of doing what I have to do now, which is take a bunch of various components and using my knowledge, wire them together such that the filtering structure, the gain structure, the whole thing makes sense and sounds good, and we're not going to have any problems. But what if instead I can just go, okay, you want this, right? So what I can do instead of doing all this stuff is go to the AI with my knowledge and say, hey, can you build me a DSP in this software platform that will have 8 analog inputs, 16 Dante inputs. The analog inputs need these EQs and compressors at these ratios and these thresholds, and then it'll basically just spit out a file and give you the file that you can then load on the software and push to your piece of hardware. And further in the future, what would even be better is you not only push that to the hardware, but then if the hardware is connected to some other sort of AI that's not generative, but it's just a different type, that AI could actually go through and gain stage everything and set all the filters based on a spectral analysis of the output to actually optimize your audio quality from every step of the signal chain.
Yeah, I mean, I see where you're going from with this, and sure, but it also to me seems like you don't really need AI to perform. Well, you don't need generative AI, which I think is what everybody's crazy about. Although I think most people don't even know the difference between generative AI and non-generative AI. But you don't really need generative AI to make these fairly, specialized tools, right? I mean, the only reason that generative AI could do what you're proposing is because the guy that the design methodology is clear and has been demonstrated many times in the past, and then it can come and take those very clear methodologies and apply them. But if you already have clear methodologies, just make a tool that does that, and there probably are tools that do that, right?
But that's where the language processing comes into play, because then you can instead have your words interpreted. Essentially, it makes it easier for you to
You're
just
saying so
explain
a
things.
non-expert can build this.
Not necessarily a non-expert, but an expert with intuitive knowledge could build this 5 times as fast as if they had to go and click and drag and type and click and drag and type.
All right.
Yeah, as an
But
efficiency tool, I mean, me and Dork have played around a bunch with AI in like developing like some different tools and stuff, and the process, the amount of efficiency it lends to the process is pretty awesome. Even though the output code is dog shit and has to be like heavily modified, like getting there and like building the core foundation of it is greatly accelerated.
Yeah, but you guys are just scripting, right? I mean, relatively simple scripts. We
Well,
obviously this isn't an AI. I don't want to railroad the whole conversation to the AI, but I get these arguments, but it still has to go a long way to become a tool that would truly be useful, right? I mean, it's
I think
like
there's
yeah,
I think the biggest impact of generative AI will be the fact that there are a lot of jobs that people currently do that they should not be doing, right? Jobs that simply don't need to exist. There are several levels of programmer that AI could pretty easily replace, given that the language models were built more extensively than they are now. Um, and those jobs will become obsolete, which is a big impact on the economy. It could be a big impact on corporate profitability. I think
maybe,
about
but
like IT. Like AI could immediately diagnose anything.
they can configure switches too. I mean, if they know, the hardware that you're putting on the network, you could say, hey, I have these things in the network. They require these QoS settings, and I have this switch. It'll build a config file for you immediately, and then your IT guy just lost his job. Well, you're not your main IT guy, but all those little IT peons that go and do that all day.
Yeah, I mean, yeah. Uh, AI will replace determinate white collar jobs, i.e., bookkeeping. Similar to the replacement of the career of the calculators when Texas Instruments was created. I mean, yeah, I don't think the socioeconomic impact is going to be that big. But those industries are overweighted, right? Like, basic legal help, right? There's a really good example. You know, most people actually don't even have the money to access basic legal help, right? And understanding the law as it is codified is not that difficult, but I mean there's flexibility in the law that AI could never account for. But yeah, I mean just basic legal research, like AI is huge, right? Especially generative AI. So that could replace a lot of work for
yeah,
lawyers, accountants. I mean,
Paralegals, yeah.
yeah,
lawyers.
paralegals, accountants, legal research. I mean, think about the number of billable hours in this country dedicated to legal research that AI can complete in seconds.
Yeah,
Yeah,
it'd
I
be
mean
an
So,
amazing
so I
job.
mean, there's definitely an economic impact to it. I'm not refuting that. I mean, my bear case is not built around AI being useless. It's my bear case is built around Nvidia not being able to make money from their AI, which is true, right? I don't care what they build, they're not making any money off of it, and they're definitely not making any money right now. So they're lying to their shareholders, as far as I'm concerned.
Yeah, it's basically what I see so far happening right now is not so much a big industrial shift as much as it is an extremely expensive proof of concept.
yeah, I would agree with that. I think right now we're in an environment where money is supposed to be tight, right?
It's not.
We have found collectively an extremely large amount of money to speculate on a very high risk but potentially very high reward, future thing. Which I agree. All the points that have been made are great. I certainly wouldn't say that AI wouldn't do anything, and I think all of those use cases are actually quite believable even at face value. But I mean, is it already? We've pumped what, well over $1 trillion into AI, into the idea of AI already just this year.
I think
Is that gonna pay off? Probably not, right? I mean,
Well, I mean, it's like .com, right? Back in the .com bubble, the joke was everything with .com in the name got pumped. The same thing with AI now. Anything with AI in the name is going to get pumped. It's just kind of what's happened. It's the way that sentiment flows in the market, right? As we go from more educated investors to less educated, you get a very diffuse pump into an idea more so than a company.
yeah. What was it like? I think it was 1999. I think it was the famous thing. Was it Pets.com? Like ran a Super Bowl ad, and it was bankrupt before the year was over.
like
Yeah.
I think a lot of the I do want to. Alan brought this up in chat too, and it kind of addresses something you said before, Jay Fresh, where you were discussing how a lot of these like calls to halt AI are really just like marketing subterfuge, right? But
Yeah.
I think there is a, especially with generative AI and it being open source to the public, there is a threat to, you know, it democratizes education very quickly. Like if you sit down
Well,
with
yeah.
Chat
Khan
GPT.
Academy's Khan Academy's already all over this, right?
Yeah, I mean, if you sit down, well, if you sit down with Chat GPT and you know nothing about calculus, it can walk you through basic pre-calc and calc one, probably better than most professors I've run into, right?
Those are fighting words. How dare you?
I'm sorry, but you don't teach those, so
I mean, it comes up. Unfortunately,
oh, I'm sorry
people
to hear
come to
that.
me needing to know what it is, and I have to kind of reinforce old
Just
concepts.
tell them
We'll
to
say that.
use Chat GPT.
I'm gonna go. See, explain calculus to me. I'm gonna be doing this. You guys keep talking.
Okay. Well, I think that that in and of itself can upset the current power dynamics that we have in place, and so there probably is an actual concern. I mean, you could go more extreme, right? You can ask Chat GPT, provided you give it the right script to work off of, how to make uh, nerve agents, right? You could ask it how to make like fissile material for a warhead. You can, and it can tell you,
Yeah, that's it's
right? There are real risks.
it's not it's you could also with a jailbroken Chat GPT you could do anything from developing dangerous things on your own to also developing dangerous content, right? That's the other
Yeah,
threat.
with the generative side on like video content and stuff like that.
Oh
Yeah,
shit! It integrated a polynomial for me. That's cool. All right. Yeah.
but yeah, like that's the part that I worry about too, is that especially in the markets where it's buy the rumor, sell the news. Generative AI is gonna, especially if it becomes super widespread and pervasive, it's going to start doing things like bombing chat rooms, with no way to be able to distinguish an AI from a person. And that's the rumor. And then you're going to have, the news of the rumor generated by chat or by
Yeah,
some sort of
yeah,
generative AI. And then, and then the whole thing is going to be traded on by an algorithmic AI trader bot that is the one who is the source of all of this and is generating its own sentiment and trading on its own sentiment.
Hold on. I
yeah.
retract my statement. It's not as cool. It tried
Oh,
to integrate 2x, and it got the answer correct, but the steps have pretty obvious mistakes in it.
tell it
So
how
I
it's wrong, so it's not wrong again.
I've tried to do that when it's right, and it refuses to take my
Yeah,
opinion
it
into
can't learn
consideration.
anymore. It's not being compiled anymore, right?
Yeah,
Yeah.
use it as a sample for your students who are trying to use ChatGPT for help. Just be like, here, I'm going to use these few prompts to ask it some questions, and you see how it's
I'm
wrong.
perfectly fine with them learning the hard way. The more people that drop, the fewer things I have to grade. I get paid the same regardless of how many people drop.
You lazy fuck.
It's not lazy. It's hard. It's tough love, man. You
It's
can't.
Yeah.
You can't. You can only carry them so far. You know?
I can say after doing this for 2 years, I've realized that there's some lessons that people just have to learn on their own. Nothing you can say will ever teach them.
Yep.
Mark It Breath. AI is replacing Wendy's drive-thrus. Also, Jim Cramer is a stonk mod. They talked about wanting to implement massive human genome like international agreement for it as opposed to nationally specific restrictive rules. I could see it meeting fairly soon, meeting serious like political resistance.
The problem with political resistance though is there's some countries that'll be down to moderate, and there's gonna be some countries that are gonna be totally not down to moderate.
Yeah,
And you're gonna have the USA saying, "Yeah, we're moderating AI," and then behind their backs, they're also just cranking it up to 11 and seeing what kind of
I
things
think
they can come.
let's let copyright and IP ownership.
that's how we ended with Skynet.
Kind
Oh
of
yeah.
push for those restrictions, right? I mean, there's already been fights about these models are learning on proprietary IP or owned intellectual property and then recreating things that are arguably violating those terms, right? And so I think a lot of it will be limited in just how, what kinds of models it can learn from and then produce, or what kinds of information the models can learn on and then produce from.
All those dangerous informations are already available online. There's still a skill level required to use the information. Yeah, but it can walk you through everything you need to know.
Okay, so
and it can
here's
also bring all that information right in front of you immediately.
Yeah.
so I'm
if you
sure it
revolt
won't tell
the
me how to
base-
create an explosive, but will it tell me how to create an energetic material? No, it won't. That's what we call explosives when we don't want people to freak out. It's an energetic material.
ask it to to make ammonium nitrate out of common household chemicals.
All right, but we can't make the whole.
J
series
Fresh is
about
putting
this.
himself on all the lists right now.
I know, right?
You're gonna lose your clearance, J Fresh.
I'm sure I won't.
Well, anyways, how about that debt ceiling, huh?
How about it? I'm excited. I still think my projections of a failure before Yellen's are more accurate than Yellen's projections, which is, probably driven by my massive ego.
Yeah, but like all of the other bad news that's looming in the world today, it's already priced into the market.
Yeah, it's not.
Was priced in back in
it's really not priced in.
Yeah,
Nothing's
no,
priced in
because
right
it's a
obviously joking.
yeah, it's a catastrophic situation, and the market doesn't generally price in black swan events. Although the U.S. CDS would infer that they're pricing in far more of a black swan event than they have in a very, very long time, since 2008, as a matter of fact. And I think we're now higher, right? We're higher than we were in 08.
I think so.
Yeah.
Well, that was the thing was 08 wasn't really a sovereign debt issue too. It just the sovereign debt seemed like it would be like the final domino.
Yeah.
Whereas now it seems like the sovereign debt thing is looking almost like the second or third domino, right? After the bank failures. And before that we had the I guess the crypto collapse. So there's an argument to be made that the crypto collapse was partially caused by interest rate hikes, but I won't get into that.
Okay, that was
Okay,
not
I'm
me.
gonna assume you did not just co-fi me,
No,
J Fresh.
that
Yeah.
was not me. Yeah.
Bleach and ammonia do
That-
not make ammonium nitrate.
They don't. They make
No.
mustard gas. It's very
Yeah.
terrible. You can never do that.
That's
Please don't do
chlorine
that.
gas. Also, don't mix bleach and ammonia in your house.
Yeah.
They'll kill you.
Yep.
In a very painful way.
It'll melt the tissue inside your lungs.
Yeah, exactly. Ugh.
Anyway. Yeah. Now
Okay,
we're all on the
now-
list. Yay.
So something I did want to get to talk to you guys about was something that I posted over on Twitter this week.
I'm
know,
really getting into Twitter.
I know Dork saw it. Yeah, I'm starting to realize that Twitter is just the ultimate platform for me to financially shitpost on.
Yes.
And I didn't
Yes.
really know how to use it before. I was like, oh, this is dumb. I don't want to say small things to people. I want to say big things and pontificate for hours.
Yeah. You just
But
write you just write like a really
but
like
now I've realized I
crazy.
can say like little things and upset big ideas by shit posting, and I like that. I like to do that.
Yes. Yes. And then you can end it with like really annoying things like few understand this.
Yeah,
Or
yeah, exactly. But hold on, let me pull this up here. So here's something really interesting that people don't talk about with the federal funds rate, and I feel like on the Discord especially, it's more pertinent to us, and I even see you guys get hung up on this. And so I want to say it again in a way with that presents more graphs, right? Not really that I'm saying anything different, but I just want to use graphs to validate myself. There is not only one reason for the Fed to raise rates. It's not simply to target price inflation, right, or simply to target price stability. And I think it should be addressed that we're very much in an economic war with China, right? We have been for several years. Trump largely ignored it during his presidency. Biden has not. If there's one thing that Biden has done as a president, it is aggressively attack China's economy in every way that he feasibly can through executive order. He's cut off their access to AI chips. And the federal funds rate is currently pressuring not only their small regional banks, but their large regional banks, and it's hurting the profitability of their exports, all of which are the foundation for the Chinese economy. And so when JPOW laughs at the idea of reducing the federal funds rate, remember that it has an alternative effect besides lowering inflation, which it's actually not very good at, as you guys can see. But it does dry up like dollar liquidity, and creates significant economic risk for foreign countries. And so right here you have the value of U.S. goods and exports of goods and services, and the total value of China's exports. As you can see, since the beginning of this year, China's, even though their economy has reopened, the value of China's exports have fallen off dramatically, as they also fell off last year when we started raising rates just a bit higher, right? And US, even though we did have that slump in the dollar from the beginning of January through February, the dollar is recovering, and US export value is going up. And this is a big part of reshoring industry, and pushing our advantage created by the pandemic forward in order to move ourselves sufficiently ahead of China's growing economy. And from a foreign policy standpoint, this is very, very important, right? And here you can see the effective federal funds rate and the total assets on reserve at U.S. banks versus the Chinese deposit reserve ratio for their small and medium-sized financial institutions. And as you can see, US rate increases have a dramatic impact on the amount of deposit reserves available to Chinese banks. So if you look at our rate increases from 2016 up through the beginning of the pandemic in 2019, those had a very detrimental effect on Chinese bank liquidity. And then you can see the current effect and their banks are almost insolvent, if not already insolvent at this point. And so there's a reason that the Fed isn't shedding its balance sheet as quickly as one would assume they would, and why they continue to raise the federal funds rate even though they supposedly have inflation under control. So discuss.
So first thing I want to say is I mean, I didn't really enjoy his presidency, but Trump did impose I think it was the steel tariff on China.
Yeah, he did.
So he did a little bit of stuff with China, but it was, and he also
He
said
also removed the regulations that protected U.S. banks from the same outcome.
Yeah, I know he didn't. It wasn't perfect from it. Yeah, so I really love these charts because they do show that there is, and this is kind of part of the price stability thing though too. And I mean, I think there's some knock-on effects.
There is.
And really, like price stability is honestly the knock-on effect. That's the intended goal. But part of it is that when you strengthen the dollar, right, you reduce the cost of imports for your country, and you increase the cost of your exports, right, which is, it tips the scales in your favor, and that's sort of what Jay Powell is trying to have happen, right? But I don't think that the Fed has seen the knock-on effects they want to. And the thing is they're focused on things that are not necessarily knock-on effects of that, right? Like increased rates, right? They should cause price stability from an import-export sort of thing. But in terms of net investments, right, rising interest rates, they also have a sort of knock-on effect by making money markets a little more profitable, right? Parking your money, it yields you more, right? So your risk-free return is increased, which means that the amount, like your hedges and your portfolio compositions are they're drastically changed, and they actually favor a underweight portfolio, especially compared to 2009 through 2020, right, or 2022, right? So there's another knock-on effect in the equities market, but he's not necessarily concerned with that either, right? His main thing is services inflation. That's all he's focused on. And the problem with that is that, and he's also focused on obviously import-export, but that's what he's publicly focusing on in front of the cameras.
Yeah.
But that as a knock-on effect of interest rates is like the very tail of the tail, right? When unemployment spikes, that's like one of the last things to happen due to rising interest rates, and that's only after the interest rates have broken something that causes companies to need to lay people off, right? So it's super interesting, and I think that the economic consequences for China are going to be pretty drastic, just because of how much stress they have in their financial system currently too. So I'm your charts got me excited because I was thinking about that, and I was like, China's anything they buy from America is going to be expensive. Anything they sell to America is going to be on discount while they keep raising rates.
Yep.
And this is at a time when China's assets are crashing in value still. So I feel like China's definitely.
I mean, their central bank stepped in 5 times in the last 12 months in order to support their market.
Yeah,
And they just and a non-C-SPAN just noted, which I didn't mention, they're calling in their debt this week for the first round of Belt and Road loans.
Oh, dude, they're gonna bone emerging markets.
Yeah,
that's bad.
Yeah, this is probably going to eventually lead to, conflict in Africa and Southeast Asia over the next 2 decades. Like, probably proxy conflict between the US and China. I can't imagine them going head to head, but I mean, China might need to. China needs real growth, and we all know there's only one way to get that.
Well, they've been easing super hard too in their country. Yeah, there's a case to be made that there's already a proxy war going on in Africa. For those in the know in the military, we have special forces there, pretty regularly, fighting Boko Haram and ISIS.
Yeah.
The part of that, is there's a lot of countries in Africa that are super rich in resources, right? Which makes them ripe for imperialist capitalism.
Yeah.
Or capitalist imperialism, whatever you want to call it. It's been that way forever, but as the need for gross domestic product to increases, the amount of tension over these areas and their resources and how to extract those and turn those into GDP for your country is gonna ratchet up, and it's definitely gonna be interesting. I don't know about a direct conflict in China, but there'll probably be At least, like, I think the front lines of the economic war will be waged in Africa.
I don't think that's a bad assessment.
It's very interesting. Africa is a very interesting country, or not country, sorry, continent. There's so much fracturing amongst the cultures in Africa, and like just breaking like arbitrary lines drawn across the continent, splitting apart cultures, mushing cultures together, all these things, and it's all because of capitalist imperialism, and because of that, the entire continent has been left vulnerable for well over 100 years now. So it's a really interesting place, and I try to read up on it when I can. People like to argue that it's like the emerging market to get into, but the problem is that we have instated so many corrupt government bodies in the continent that it's practically uninvestable from a risk analysis standpoint.
Yeah.
If you don't know what can be nationalized and what's not, and what's going to be corrupted to zero and what's not. But interesting stuff, and they made it that way though. So that way, a government itself, an entity, right, could swoop in and possibly, nationalize the resources in favor of their country, right? And that's what's been attempted to be happened for decades and decades and decades. But it could come to a head. I mean, if there's a global recession, it could really come to a head.
Yep, I agree. Everyone's going to want growth, and there's only so many places to extract it.
It's a big if, though. There's a lot of economists are getting more and more excited about the soft landing.
Because an economists think.
You're talking about those economists who are in their nice leather chairs and their libraries full of many leather-bound books that smells of rich mahogany, while they talk about the consumer being strong when they have no idea what a gallon of milk costs.
How much is a gallon of milk, by the way?
I don't know.
Like shit.
I only buy grass-fed organic raw milk, and I don't know what it costs because I don't look at my receipt.
Oh god, don't drink raw milk. Why?
I'm not drinking any raw milk. Raw milk is illegal in New York. Don't worry.
Okay.
There was a British guy I talked to who said his favorite thing about living in England was that you could get like raw cream, and then like the cream on the top of the cream, the creme de la creme. He said was one of the best things in Britain, but here it's illegal.
Yeah, but they can't get a medium steak.
That's true. Well, yeah, and they can't get they can't heat their house.
British people. British food is gross.
It is.
I mean, London has really good food, but most of it's not British.
It's like international.
Yeah.
Like yeah. British food.
So,
like the cuisine of Britain is pretty awful, but steak and kidney pie is phenomenal. So they've got comfort food down.
So can I share a chart, Girk?
Yeah.
Just to kind of.
Only if it has no. Oh god, it's labeled. Come on, dude.
Is this the unemployment rate?
No. Yes, but no.
Wait, you've subtracted M2 from the unemployment rate
on a rate of change basis. So it's the rate of change.
You've been playing with Fred way too much.
Yeah.
Oh yeah, I do this a lot, but it's cool because you can start.
Your Fred's gonna get rashy. You need to give it a break.
You're
gonna grow hair on your hands.
The biggest problem with Fred is that you can't like rescale the chart or omit data that's like the huge spike. I want to get rid of that transient in the scaling, but I guess I could do it if I built my own platform, but that's a pain. But anyways, this kind of shows the sort of it shows the relationship between the rate of change of the money supply and the rate of change of unemployment, right? So money supply is shrinking, and the unemployment rate, right, is basically staying flat. But there comes an inflection point that we've already passed, right, where the rate of change of the unemployment rate is will surpass the increase in M2, right? And that's basically sort of when you have a full-on recession, right? Because you have unemployment growing faster than you have M2 growing, so your deposits are not growing as fast. It's I feel like it's a straightforward thing to sort of wrap your head around, right? Because people aren't saving money, and in fact, they're spending it and they're losing their jobs, which is, at that point, the recession's in full swing. And if you look at this chart, we seem to be on the precipice of something along these lines. And while things may be different, I'm a strong subscriber to that song by, I believe it was James Brown. The more that things change, the more they stay the same.
Yeah.
So, if unemployment starts to increase faster than M2 increases, which right now it's decreasing, but M2, let's say M2 turns back up.
Mhm.
If the rate of unemployment increases faster than M2 can grow, then that's when you sort of have this unemployment spiral, right? Because companies can't make enough money to justify hiring new people, and especially when you're in a tight credit market where you can't, take out cheap debt to hire these people.
Yeah.
And there's not really any sort of like a spread between the interest rate and the productivity of your employees.
Yeah, and investors aren't going to let them turn to their cash reserves
Yeah. So
But
we're really close.
in order to
here's
ramp
the
up headcount.
here's the problem, though. I mean, the unemployment rate, it's a highly nonlinear process, right? We have, I don't know what the multiplier is now, but back when Jay Powell was talking about it a few months ago, or maybe at this point it was like a year ago, but we were at some point we were at, close to 2 jobs for every person. It was like 1.7 for a while is the number they were throwing around. And so you're basically going to have low unemployment until we get to one, closer to 1 to 1, right?
Well,
And
so here's my problem with the unemployment numbers too, is, if they're not adjusted to population growth. So low unemployment, and I was thinking about this the other day. I wish I had discussed it, but low unemployment is bullish if you have consistent population growth, right? But ever since the great financial crisis, population growth has started tailing off significantly. So low unemployment, and this is kind of what I was talking about when I was saying examine the fundamentals of the economy like it's a company. With a declining population or just a stagnating population, low unemployment isn't necessarily bullish on growth, right? It's bullish on stagnation because you're not getting new jobs pumped in you are getting new jobs pumped in at the population growth rate with low unemployment that stays flat, right? You are introducing new jobs at the population growth rate roughly. But you are, like, I guess 18 years ago. So what we're looking at is not necessarily like, oh man, unemployment's so low, everyone's got jobs. It doesn't mean new jobs are being created. That doesn't mean economic growth is happening. It just means that the economy isn't shrinking.
yeah, I mean, I know very little about R star and what all the calculations are that goes into that, but I would imagine that that's partially the reason why R star is still calculated well below 1%, right? Because of that.
Yeah, yeah. It's essentially the same thing, I guess. But I think that the economists that are getting really bullish on a V-shaped recovery, and like it's not even a V-shaped recovery, right? Because there's nothing to recover from, right?
Yeah,
It would just
I
be
don't think that they're saying V-shaped recovery. I think they're just saying very teeny tiny recession, or maybe even no session, right? Soft landing, no landing.
yeah, I guess. But even to that regard, I don't see how you don't have a recession in a stagnating economy. Our population growth isn't going to pick back up, right? And unemployment can go to like 10 basis points. Okay, it can go down. It can asymptotically approach zero. But if our population isn't growing, our economy's not going to grow.
Well, productivity, right? But productivity is going down.
Yeah, I mean, well, yeah, we're asymptotically. Well, we're also. I mean, and that's another thing too. Is we think that AI can increase productivity, but I think there will always be an asymptotic approach on productivity. Based on technological advances. So even if AI boosts productivity, that's only a temporary fix because our population isn't growing. We're not getting more spenders into the economy. These people who are being more productive aren't making more necessarily. So there's just the avenues for economic growth. This is where I do search for the bull case, and it all has to do with our economy growing. But we've sort of hit the ceiling on the growth, right? We really bashed our heads into it in 2021.
I mean, I think green energy is I know that was that was kind of a hype cycle that's already played out, but I do think that there is a lot of value to the world in green energy that can stimulate a ton of economic output.
Oh, absolutely. In emerging markets, yeah, absolutely, 100%.
I mean, everywhere.
I don't know here, but the thing is now when you talk about developed countries, we already have pre-existing infrastructure based on our existing energy consumption, and that the pain involved with transitioning a utility company from an energy provider to an infrastructure maintenance company.
It's not either or. It's both, right? It's slowly weaving in the green energy into the existing infrastructure to increase robustness and reduce costs and things like that. So green energy today, there are implementations of green energy that are actually cheaper, or if they're not cheaper, provide a more robust system that ultimately will save money and lower risk down the line today, right?
You say reduce cost. I see reduced revenue.
I don't know about that.
That's the way I see it. So PG&E, Pacific Gas and Electric, they make most of their money selling energy, right? You could tell because they don't invest in infrastructure, and that's why we get 9 million acre forest fires. That's an exaggeration, but you get 60,000 acre forest fires in the middle of nowhere because they got some line that was put up in 1984 that just fell apart, and they never even inspected it because they got a ton of them. So I agree. I'm not going to say I disagree. I completely agree that green energy is not only a boon to economic growth in the long run, but it's also a clear path towards a sustainable future, which is even further long run. It removes a massive tail risk from the global economy. But the medium term to short term effect of a large scale transition to green energy would be that energy companies themselves would have a serious drawdown, and that could cause an economic pullback purely because people would lose their jobs related to extraction and provision of energy. I mean, even though there would still be that extraction and provision, it would be scaled back significantly.
Yeah, I mean, there are ways to get around it, but I don't want to get into like a political economic discussion because it'll just make people angry. But it was just an example of somewhere where I see there's a definite need, and there's a lot of work that could be done there to push that forward.
Yeah.
Some people are saying nuclear is the only green energy. I mean, maybe right now. I mean, nuclear certainly should be a component of the transition. I don't know if we really want to be enriching things, at mass scales forever. There's some fusion stuff that looks pretty cool, but it's a pretty far ways off still. I really like solar water splitting. There's some solar water splitting applications that are actually pretty neat. So everybody just burn hydrogen instead of burning other things. But of course, there's a lot of issues. That's been studied for a long time and pushed by the DOE for a long time, and that's been slow going.
Yeah, hydrogen has a
reasons.
Problems, right? I mean, it's perfect because when you burn hydrogen, all you're left with is water and oxygen, or is it just water?
Yeah.
But the thing is storing hydrogen, right? And
storage is tough. You need high pressures. So people have tried to find like solid state things like in zeolites and stuff. I don't want to make this a science thing either. I guess I'm kind of pigeonholing myself into a corner.
Nope. I like pigeonholing better.
And it's not only that though; it's also the process of electrolysis too, right?
That's why I like the solar power, right? Because you can get you can get catalysts that just require sunlight, and it'll lower the barrier enough to just spontaneously, well, not spontaneously because you still need the sunlight, but the sunlight, which is right about 3 to 5 EV, right about enough of what you need to split water. You can get it to happen. There's fouling issues and things, but you can basically just put a bunch of this stuff in water and shine the sun at it and start getting hydrogen out.
That's cool. That's a long ways off too. It
Yeah.
sounds 10 years off. Just like fusion. Fusion's always 20 years out, right? But
Yeah.
anyway,
Creating a star on a planet is proving difficult.
Who knew? But anyways, yeah, my projection on economic growth, at least in the near term, like especially with declining population, and things like that. Green energy is the nice little, stabilizing factor. But I think that with reducing population size, the workforce, shrinking over time, at least the growth of it shrinking over time, presents more near to middle term risk than the advancements of technology that we're making now, right? That may or may not improve productivity to a new asymptote. But without an increasing population, you can't have the infinite growth model of GDP be valid, right?
Yeah.
Your GDP pretty much has to be inherently tied to your population growth, and that's where I think a lot of these economists are sort of missing the mark with their really gentle recession things. They're almost sort of thinking that this workforce is going to slowly grow and introduce new GDP into the economy, which I disagree with.
No, the workforce is barely barely as productive as the larger workforces throughout history, right?
Yeah.
So yeah, the productivity is not keeping pace. Neither is wage inflation, but
Absolutely not. Yeah, real wages have been crushed in the past 2 years. It's been gnarly, right? Like back in 2017, making like 60 grand a year meant you were doing pretty dang good, right? You could buy a house, raise a family, and have a good time. But nowadays, you're making 60 grand a year, you're like, I guess I get to live in a studio apartment with 2 roommates and all that. I mean, I guess not, but you need to have a 2 income family, to make at least 60K a year to live comfortably without kids.
at a
Yeah,
minimum.
I think when I graduated from undergrad in engineering, the average salary was like 56 starting, and now it's like 62. And I graduated in undergrad in 2008.
Yeah,
And
and
it was,
that industry's not alone, right?
Are we the
Like,
same age, Jay Fresh?
we're just about, yeah.
Fuck.
dang, I'm the youngin'.
Yeah, you are.
I think you guys are like,
We keep
you
you
guys are
around
like,
because we're gonna need your blood here pretty soon.
yeah, am I your blood boy now?
although I did start college earlier. I just dicked around for 2 years first. But I think that still puts us
we
at
all
the same
we all
age.
have our path. Yeah, I do also want to shout out to Dunstan, who is correct. Power distribution and storage is a big problem, and it's also true that most of the energy we use is just to air condition our homes and buildings and just to make
To
us
offset
comfortable.
global warming.
Dude, Dunstan was coming in last night with some knowledge bombs. I was enjoying it because he was mentioning, the treasury balance, really kind of in agreement with Girk, but even more extreme that they do not have the liquidity to continue operating through June 1st, especially with the they have to. I'm pretty sure they work on a biweekly pay schedule. So there's gonna have to be a lot of accounting magic that happens in order to keep them from running out of money before June 1st.
Yeah, no, I mean, we keep saying that the number is certainly very low, and it's very scary.
The last reported closing balance for 518 was $58 billion. $57 billion. Sorry.
Yeah, right. But
We're getting real close.
I have seen some models like the cutoff, like the real like sort of do or die is I think June 15th, and then once they get there, they get more extraordinary measures at their disposal, which could potentially take them to August. So we're dealing with like this weird pinch point, right? Where and some people are trying to model what they expect to happen. Of course, these models keep getting revised downwards, right? So it very well, they could just run out of money. But a lot of people are saying that they might be able to squeak through that pinch point with like $10 billion. And then if they do that, then we have till August. And so all of this stuff could then drag on through the entire summer.
So
So don't.
Varex, hold on. Are you suggesting that we pump greenhouse gases into low Earth orbit?
Wait, what's going on?
You said,
I
why don't
wanna
we
know
build our
this.
coal power plants with big fume exhausts so high that they're outside the Earth's atmosphere?
We don't have a material that could support its own weight to that height.
Yeah. What carbon nanotubes, bro?
Dude, well, why don't we just pump it into the earth, right? Just drill a hole into the core and then pump it into the core.
We don't.
Why don't we just plant more trees? I'm in.
No. That is the only solution. That is actually more ridiculous than a carbon nanotube.
Wasn't there some company that was like making a drone to just like rocket seeds into the ground?
Yeah.
Should have more of that.
No. That's irresponsible. Honestly, it really is. Like, you look at NorCal.
Drones are for killing people.
Well, not
That's
only
what
that,
they're for. Not for saving
overforestation.
the earth or some baby shit like that.
Well,
True.
overforestation
You're
is
right.
just as risky as deforestation, right? You need to have a nice balance in order to have a functional ecosystem. You can't just plant trees all over the U.S. and expect it to go smoothly, right? If you do that, at some point during a drought, the entire U.S. is just going to be pockmarked with forest fires, right? So there needs to be a responsible approach, and
Why not just
definitely,
replant trees where we cut them all down?
yeah, it's what they do in Oregon. That's what they do. It's clear cutting. There's new growth, and they just go and they cut down all those new growth trees and plant some new ones underneath them.
What if we took some of the money that we blow on stupid shit or we used to line the pockets of local government and we spent that on clearing out the forest undergrowth? Now I know that's radical. I know it's a radical take.
The ridiculous part is where you take money out of the corrupt cycle and the revolving door of politics. That part is utterly ridiculous, and
How dare I?
Yes, I raise my nose up at you at the thought.
I'm sorry. It was just a suggestion. I didn't mean it.
That's like saying, why don't we take money from the Pentagon, right? That's ridiculous.
What?
Don't ever
and leave our country defenseless?
Dork, don't engage him. He is a shill for Big Rake.
This stream brought to you by Still chainsaw manufacturers.
That's right. Yeah, don't let Big Today get you distracted from wiping your butt with toilet paper. Okay.
Husqvarna is second to one. Okay, I've said all they required me to.
All right. So where are we at here? When's the economy going to blow up?
Well, let's talk about the SPX, I guess. Something a little more pertinent and a little less esoteric. Yeah. I've noticed that dealer gamma is falling back below zero after Friday's nonsense price action, where the bulls lost all the ground that they paid so heavily for, and that dealer charm is collapsing once again, like I told you it would when you were drunk and freaking out your port was going to blow up. So
it's only half blown up now.
Well, I told you how to protect it, not as a financial advisor, but as a friend.
No. But that didn't even matter, right?
That's because you didn't do it, did you?
No, of course not. The market went down.
Yeah, but you could profit on if you did it. Not only would you collapse the risk in your spreads, you would have profited on the downside. You missed the downside profit.
Clearly, I was too drunk to capture all of the nuances of what you were trying to get me to do.
So beautiful. It was a beautifully constructed repositioning.
I also
hedge funds would pay me good money for that information.
Well, I'm gonna be asking for more this week
because Nvidia is gonna blow up.
What the hell to do with Nvidia? I mean, at this point, I just need to buy calls and pray that we don't stay at like 312 forever.
So here's my question: does the SPX take a little dip when Nvidia hopefully releases forward guidance that has been adjusted for their loss in market share to these other giant tech companies? Or does it stay flat
I think
as there's repositioning amongst the other ones? There's a
How much?
dispersion.
Well, here's the problem. Here's the problem we
I-
face with all the pumps. There's no fucking liquidity still, right?
Yeah.
Like
That one's long.
there's no money to keep it up, right? Like the Viagra only lasts so long, and then the bulls run out of erection, and then we fall again, right?
Yeah, but here's the thing. Let's say one Viagra pill. I don't know how long they last. I'm assuming a day. I don't know.
That's like 2 days. You get 2 days of
okay.
solid pump.
Let's just call it a day, just to make it easier.
Alright.
And let's say the Viagra pill costs $10, just to make. I have no idea how much it costs. I actually hope that somebody just gives me all these details in the Discord afterwards. Let's say it lasts for 1 day and costs $10, but then you use the erection that you've been given to make $11.
Oh fuck.
So then the next day you can buy another Viagra, and then you can make another $11.
Yeah, but here's the problem: on day 3, when Jesus rises, you then spend $10 and you lose 8. Yeah,
but that seems to have happened a few times, and
that happens every time.
But then they just do it again.
Yeah, because then they buy puts. The calls are too expensive, right?
They're not buying puts; they're selling puts.
But they're also buying puts.
Even I was looking at.
They're selling calls now. Friday was call selling.
Yeah, I mean, we lost a ton of delta on Friday. Some of that was just selling. Some of that was stuff rolling off the chain. But there was still some positive gamma below us, which indicates, selling below us. And I think it was puts, right? So I think there's still put selling that is occurring. And I would really like to see on Monday if that continues. I would like to see some chink in the armor of all of these puts, because it's this just incessant stream.
Are they not profiting off of the pumps? Well, they do initially. The initial part of the pump is very profitable, and then kind of in the mid range, it starts to lose. Like once they cross gamma neutral, no. Once you cross gamma neutral, and the market maker starts to price up calls, it becomes unsustainable.
Yeah, it's just a really fancy pump and dump, and it's just a matter of, are people getting out in time? Some people probably are getting burned, and some people aren't, and it just kind of, it's just a bunch of pump and dumps every day, over and over again.
I think it has to do a lot with also being able to make more money off the pump. So, I think kind of what's happening is there's a giant strangle being constructed, and then along
short
with
or long.
What's up?
Short or long?
Short. It's a short strangle.
Yeah.
It's crushing IV, and then inside of the strangle is the pump, right? You use your credit to push the pump, and then you make.
Well, the top end of that strangle just got partially blown up this week.
Yeah, but then it all just replaced on Friday.
Yeah. So
right? The second the bullish momentum fell off, they just started selling calls again. So I mean, it's kind of like, it's really, I mean, if you look at it from like an institutional standpoint, it's really like CTAs and systemic funds versus like hedged equity returns, right? So you have your hedged equity returns just selling collars all over the SPX, right? And then you have the systemic funds trying to squeeze them out, right? So as long as you can stay above the short side of the collars, the market can't really gain enough downside momentum to tank. But calls get cheaper, so you get this take advantage of this like mispricing in the near term, because realized volatility isn't translating into implied volatility, right? And you just get to take advantage of these these big possible pumps up until the point where they start to collapse, right?
Well,
And
it's
then
basically
you
arbitrage.
can
So that's
fight.
I mean,
You can
and
fight. Yeah, it is.
Yeah.
And that's why I really want to see what happens tomorrow because, yeah, I mean, we just had a ton of Delta fall off the chain because we had a big OPEX expiration, but I would like to see some confirmation that the pump is really losing some steam. I mean, it was great that we were red on Friday, but we were down 0.15, right? It's not like we really collapsed, and it was almost frustrating watching how resilient the downside still was on Friday, even after sort of some of those clear, selling events.
Yeah, but
Well,
50
so
basis points from the high, right?
I think this
Yeah.
I think this comes down to sort of you have
I think
these
we're on one.
funds, right, that have like there's a lot of quant funds out there that and I kind of just really started digging into this more over the weekend. I spent way too much time on it, but these quant funds, right? The way they work is they're trying to make more than they could make if they just parked all their money in a money market, right? So as long as that's possible, they're going to do it. But at some point, there is, and they're all delta hedge. They all got shares of something, right? And they're kind of sloshing around a bit, but it's net positive delta. And I think there's also, and I think these big institutions sort of understand this. And the one thing they don't want to happen is for there to become in these quant funds, especially the ones that are doing these short vol strategies, in order for them to beat the return on money market, they have to flip their delta hedge negative, right? Because as soon as that happens, you get the consistent sell off in the market, right? Those long drawn out drawdowns, because these quant funds are just repositioning, rehedging, and that's how they're beating the money market, or they just go to the money market, right, and pull all their delta hedge out, which is also a sell off. So there's and I don't think there's like a hard and fast price where this happens, but there's definitely a downside where this does happen. Say where the SPX drops below up 4% year to date. That's a really bad point to be at because now you have the equity market underperforming the money market, and that's a really bad place to be. That's where you are in a bear market, right? Because there's no incentive to be long equities with that kind of performance. And they don't want that to happen. There's a very strong incentive to not allow the equity market to underperform the money market, even though there's a big shift into the money market right now. There's the performance still justifies a sort of a trade in the equity market, I should say, just a general trade in the equity market. A long equity, short money market still is a solid trade. But if this market turns down and pulls back by even just as much as like 400 basis points, like that could shift, and that's where you do get the bear market, the bearishness rolling in, even just from the quant funds.
Yeah, I mean, and we also have to talk about individual stocks as well. It's which are kind of also playing a role in this. There's so few stocks that are helping assist the SPX that um, I mean, basically, this is also playing into it, right? If those 7 stocks weren't pumping, or 10 stocks or whatever it is, this strategy wouldn't be possible at this point. And it's interesting because a lot of these stocks have now been pumped so much that they are approaching or have already surpassed Gamma Max on their options chain. And so the question does become how much more room is in the tank. I mean, I still think it could be possible if they really wanted to and they kind of, came in all guns blazing and wanted to, go for glory, they could probably push the market up to 4,300. I don't think it would stay
Through
there
the
for very
collars?
long. I don't think it would stay there for very long, and I think it would come back down quite quickly. And that's kind of where we are, right? So we are definitely kind of on the upper range of what they're able to do, at least with the stocks that they have now. So if we don't start seeing some sort of improvement in the breadth of the market, the weight of the market itself is going to just start weighing down on all the derivatives trading, and it might actually start to overpower it in a way that will, make it all come down. And then once the derivatives can't stop it, it's going to be interesting.
How's dispersion been looking?
It seems obviously like there's very little, right? The concentration in the SPX is insane. Unless that is the dispersion trade, right? Is concentrate in mega
Jesus
caps.
Christ.
What are we looking at?
SPX gamma weighted dispersion.
Oh shit. Yeah, still high as fuck.
It fell on Friday though.
Okay.
Yeah, it's gonna be. It'll be an interesting summer. I think it'll be hard to tell. What's gonna happen. Another thing I'm looking at too.
Oh, look at Vega dispersion.
Oh yeah, I mean, without fully understanding what this Vega weighted dispersion is actually calculating, I can confirm from most of the individual stocks and the indexes that I'm tracking, everything has become extremely sensitive to volatility, which I don't think is a coincidence given how much volatility has been shorted up until this point. But
that's really
we're
not bullish.
we have more sensitivity to volatility right now than we have had since we started tracking these options. So Jan 2022.
Wouldn't this imply that we're seeing long short, like long theta, like longer dated short interest coming in? I'm trying to find something. Sorry, a little distracted.
I don't know. I think what it means is that we have a lot of far out of the money options.
Yeah.
Where they are in time, I'm sure they're spread out all over the place.
Well, we could look at theta dispersion on SPX.
Ooh, that'll be cool.
And so what this basically does is
oh Jesus.
So it's saying that they're far dated or short dated.
Yeah. More theta.
Well, I mean, higher dispersion doesn't that necessarily mean there's just a lack of concentration?
Is this multi-year? Does this like reset on OPEX, the significant OPEX and leap?
I don't actually know how they calculate this one.
This seems strange to me that it wouldn't be sort of like a mean reverting type. How far back does it go?
April 2020. No, a little earlier. Yeah, April 2020.
Yeah, I would need to see more data on that to really understand what it's telling me. Because I wouldn't imagine that it would just go straight up forever. I mean, unless I don't know. I wouldn't even want to speculate on this. I don't know how the calculation's being done. But yeah, I mean, because we have all these short-dated options, these shorted options that are far out of the money. We're extremely sensitive to changes in volatility, and that is very high. I mean, we're talking like, last year the highest Vega, let's say, just on like the QQQ was, or like the Vega sensitivity. I mean, like $500 million on QQQ, and right now it's at over double that.
Yeah, I've been saying, on stream, but I think it's kind of just a generally agreed upon thing that, like right now, any sudden news during trading hours, like sudden bearish news especially, could just send the equity market into just a fat tailspin unless someone steps in to protect the plunge, right? Not the plunge protection team, but like Jamie Dimon comes in and sells some more puts or something.
The composition of men.
Exactly, yeah. The composition of men who don't want their equities to crash, at least not on their terms, right? Yeah. If there's they want to, anyways. So yeah, it's super messed up. This whole market right now is just like in Jan, but even more so, right? Like it feels more and more like the face ripper that I've been alluding to, right? Where equities get a huge pump, vol drops off a cliff, and people get ready to buy the dip. I feel like that's kind of happening, right? And I don't know about like a market crash, but it definitely feels like we're in for some kind of correction. If there's any sort of news about the economic outlook that doesn't look like that definitively is bearish, it could just send this thing down, right?
Yeah, I agree. It's just a matter of when's it going to happen, right? But when it does, I think it's going to be relatively quick, and so it's going to be hard to catch that. You know, it's going to be hard to just say, okay, just wait for it to start going down and then do it.
No,
But
it'll be
I
over.
mean, it looks like, I mean, unless we get some sort of newfound surge of bullishness from the general public, I mean, you're talking about pretty big names that are hitting Gamma Max right now. Google, AMD,
I mean,
Nvidia.
we've already been seeing like Nvidia, especially. This is noticeable because I've been paying more attention to it. But you know, institutions are they just keep piling back into like every pump they pull and then pile back into their short calls, right? Like
Yeah.
they're like the majority of institutional ownership on Nvidia is not bullish in this price range.
Yeah.
Right?
Netflix hit Gamma
They
Max.
are selling. Not only are they selling Delta out the money, they're selling it in the money. Right. So yeah, Netflix did. So you know that's you know there's no more buyers. There's no buyers in this range.
Yeah.
Most of the
I mean,
effect we see is like indexes pump and they just pull their short calls, and so everything pumps a bunch, and then they place them again.
yeah, I mean, everything kind of looks like, I mean, even QQQ has gotten pretty close to Gamma Max. And everything just kind of looks like we're due for a pretty big correction. It's just at this point in the year, with the quite unexpected amount of bullishness after the banks, at least. It's hard. It's hard to be confident just because clearly there's things that there's positioning that we just can't know.
Yeah.
But it does feel like, I mean, we continue every time we continue to get more and more bullish. It just makes the bottom that much deeper. It doesn't really. It's not really making me feel like there's more momentum to the upside. It's just there's more than I thought there was before it's going to pop down. But that being said, if the SPX hits 4,400 in June,
All these stocks that
we were
closed
we were.
above Gamma Max, isn't there a chance all of them squeezing higher this week from shorts getting killed? I mean, the shorts
I
already
think that
got
already
killed.
happened. Yeah,
Yeah.
that just happened on Friday, right? Most of the expiry was on Friday, so they didn't have time to wait it out or react. They had to, yeah. So, and I know because it happened to me, fuckers.
It feels weird. Like this is almost like a gigantic replicating long position, right? Like you're not really long, right? If you're underweight equities, but you want to be exposed to the upside, you just replicate a long position with options, and that's kind of what's just happening here. Is they're just building a big sort of derivative basket that simulates a long position, and that's how they're able to
I mean,
bid up.
they're synthetic longs, right? Like they're sold. I mean, they're
Yeah,
long combos
I
even.
think yeah,
They're
I think there's
sold
like
puts,
a
long
calendar
calls.
aspect to those synthetic longs, but yeah, they're like long, somewhat farther dated short puts that are being sold in a rolling basis. Shorter dated calls that are being used to do shorter term pumps, and then some selling calls at the top as well to
Yeah,
range bound it.
like a range bound synthetic long almost. Yeah, I
Yeah,
would.
yeah.
That sounds about right. And it's
I
just
mean, it's not like, I don't think that's even really up for debate. I think we have enough data to say that that's basically what's happening.
yeah.
Yeah, yeah, I agree. But I think
But
I think the other side is also true. Long call or short calls being sold to buy longer dated puts though. That's what's kind of interesting about the bear side of all of this is the bears aren't they're not buying like zero DTs. They don't seem to care about them much. They're buying like 3600s and 3800s on SPX for like June, October, September, Jan, right? They're getting like tons of Vega exposure.
yeah, it's crash protection.
But yeah, but I mean, I would argue that that positioning is even larger than the positioning pumping us. Um, it's just not as like aggressive in the short term.
Yeah, and I think that's true because I mean you can tell. Usually at like a new week or like every morning, basically, you wake up and the VIX is 1 or 2% higher than it was the night before when it closed, and I think that's just as the short puts roll out of that window, then those long puts that are just sitting there waiting
I mean, right
sort of
now we have
poke their head out, right?
at
And then they just start selling
4150.
more throughout the day.
So at 4150, which is $40 out of the money, we have 18.9 million gamma, right? And remember, gamma increases relative to moneyness. Um, and at the money, at like 4200, we have 90 million call gamma, right? But then you look even further down the chain, like 4000 is negative 20.4 million gamma right now relative to our current moneyness. 3950 is 12 million, 3900 is 23 million. So like that's a lot of fucking gamma weight given how far out of the money those positions are, right? Like that's a shitload of gamma.
Yeah, no, I agree, but and obviously some of that's sold, and it's just a question of who is selling so many of these puts that they're counteracting this very bearish positioning that exists. I don't know. I mean, it blows my mind. I mean, the scale of. I mean,
Here's
could
something
it
fun for
conceive?
you.
I mean, could it conceivably just be that, many different market participants have just decided to be equally bullish and bearish on puts?
I think they're
I
just I
don't
think it's
know.
just
That
like
seems
it's still
less
like
likely than anything.
short term bullish, medium term bearish, right? But it still feels like I mean like we're still looking at the capital flows and no money is like really moving into equities, right? So all the money,
No.
yeah, it's all derivative based. And so like if it's all derivative based, then oh, and by the way, those strikes are those are short are long puts.
Yeah, I don't think the
The
short.
long puts have
I-
crowded out the short put
Yeah,
selling.
I think the short puts are lower down. I don't think the short puts are bold enough to sell this high up.
Yeah, 17 million gamma sold on Friday at 4300 by the way.
Fuck.
And then 7.9 million sold at 250. And probably more interesting is 420 sorry 3.5 million sold at 4125. And those are that's the sold positioning. So yeah, I think things are getting really bearish. And then long gamma, like positive gamma at 3900 went up by 10 million, 3800 by 7 million, 3700 by 9.1 million. So either those short puts are being pulled off now that we're in the higher range, or someone's coming in and going long puts, short calls. And they're selling
I mean,
calls at every like 250, 4300, 4350 is 8.6 million, 4400s 5.4, 4450s 4.7. So the fucking upside is even more heavily sold than it was going into the beginning of this week. So
yeah,
I think the dreams of 4300 are dead in the water right now.
I mean, everything is telling me it should be going down, right? But
Yeah.
it's been telling me that for a while, and it continues to surprise me. So the question is how much more
Well, here's the
upside?
thing: is all gamma at the money is long.
Yeah.
So that's where the support is. And that's where the support always stays though, right? Is it just stays like at the money or one DTE, 0 DT, 1 DT bullish positioning that's, at the money or within, point 2 delta of the money.
Yeah.
And then but it's so hard to predict because it just comes in intraday, right? They
Yeah.
just start
That's why I'm
loading up
saying I
level by
would.
level.
Yeah. I would like to wait and see kind of how this next week starts to form. If the Bulls take everything that they just did, kind of pumping this, and just continue to pump, or if they start to, take profits and sort of step back and then let it all start deflating. I would like to see
And
what
we're
ended
still seeing we're
by.
still seeing a continued decline in SPY volume, right?
Yeah, I haven't looked at it recently. Is it still bad?
It picked up actually
The last 3
at the end of the
days.
week. Yeah,
But I
it
mean,
picked up.
over the period, it's still. I mean, like if you go from like the bank
Yeah,
failures when
it's
the
still low.
liquidity
It's
came
low
in,
but choppy.
yeah. I
Yeah,
mean, mm, it broke up a little, like over that trend, but
I mean
but
that could
barely.
just be churning FTDs through the market, right? Not like through the ETFs in specific, but like just churning FTDs and various other net settlement things happening to cause the churn because the most of the volume that's come in has been on sell off, right?
Yeah,
There was like one big buy wave, I think, on like the first day of the pump, I want to say, and then the next day of pump was way lower volume on the pump, and then Friday there was a big fat sell off, and even for the past month, right, the volume has been to the downside, and it seems like it's mostly just these big block orders of futures being sold off. But there's a whole other thing you could discuss with why that is, right? Like you could theoretically, if you find a point of high liquidity in the futures market, just dump all your futures and then slowly buy them back up into the illiquid ask, right? And then push prices up, with a lower exposure to futures. Like there's things that could be being utilized by sorts of like flash dumps, but even the sell-offs though and the bids that come into the market, right? The sell-offs have had more magnitude, at least from my subjective sort of analysis on what's been happening.
yeah.
And it seems like it's a risk off from the ETFs, but I'm not exactly sure, right? If it's that or if it's just an increase in arbitrage from rapid price changes in the underlyings, right? There's a lot of things it could be, and a lot to
I
dig
mean,
in.
I think what's very slowly occurring is money is shifting out of the market, and that is being propped up by derivatives and being propped up by a concentration of capital into companies that are going to give them the most effect on the indexes possible. But this is ultimately a an event that it will come down, right, at some point. Unless money moves back in, unless something happens that allows money to come back in. But this whole year, money's been leaving, right? And this whole year, the market's just been going up. And I think this is probably characteristic of most kind of crashes or corrections that there's always this weird uptrend that occurs after a crisis, and everybody thinks it should be going down, and it's because it's being propped up while money is getting drained out. And the question is just how long is it going to last? And I think this week will give us a lot of information on what the trend's going to be in the near term going forward. Now that we had that huge options expiration, so I'm not
I
super
mean,
bullish or bearish. I'm just sort of peenerish for this week.
me
Yeah.
too. But that's the kind of the argument, right? Or the argument one should have with themselves, right? You need a catalyst for a crash, but you also need a catalyst for a bull market. And I mean, AI is not a sufficient catalyst for a bull market considering the economic backdrop. And it's more likely we'll have a downside catalyst. Whether or not it's going to be a treasury default,
Let's say that there
likely.
are more downside catalysts that exist than any of them are more likely.
Yeah. I would say that's an accurate way to put it. They're
Yeah, I
they're
mean,
all
you can't
people.
talk about catalysts without talking about probabilities, right? Otherwise,
Yeah.
throw alien invasion on the list.
Yeah.
And I
Right, but
think and I think that's what's going on is that people aren't just ignoring the catalyst; they're just assigning almost no probability to it.
yeah, and they're assigning very real probability to other things, to the upside catalyst, right? Like that's kind of why the market's been melting up, is because
That's what markets
Here's a
do,
good
though.
question. Does Nvidia's earnings this week deflate the AI bubble? Like
no,
Nvidia lies.
I think that
It's the
uh,
perfect excuse, right?
I think that
for
the
one
people
quarter
in I
though.
would love to see it, but I think that the people investing in AI are going to give them a pass for another quarter.
For the
Yeah,
record, I'm
but
bearish. Do you know that Kava's about to IPO, Gaff?
oh shit, are they gonna have an options chain that open?
I mean, I think based on, with how little Nvidia actually gave investors at the last quarter and how much investors gave them in return, I don't think it's going to take very much for them to say this is the long-term vision and these are macroeconomic headwinds that will
Do you really
pass.
think investors gave them that much, or just like BlackRock wants to get out because they still have shares at 325?
I mean, you look at all these ETFs that are just packing this stuff in and just selling it to everyone, right? I mean, it's just it's such an easy sell. It's like AI is the future. You're going to want some AI exposure, and everybody gets a few percent of AI exposure. And now you've got this massive pump.
Well, that's the messed up part, right? Because a ton of people, right, and asset managers and whoever, they're buying QQQ and they're buying SPY in order to get diversified and exposure to entire swaths of the market. But what they're really buying nowadays is literally just like 10 companies, right? It's the concentration in these ETFs is like, I would be so angry if I was an asset manager and I saw this, right? Like I would deleverage from these things and just go to a basket instead and do an equal weight. But there's a very large constituency of market participants who just buy SPY and QQQ and don't think, and they're sort of contributing to this overconcentration by buying more of the ETFs, right? Especially if the underlyings, those 10 underlyings, are being pumped to the bejesus. It's sort of like a positive feedback loop that will
Yeah,
increase the concentration, and it increases the risk like exponentially. Like it's like if the AI bubble deflates, you not only will you have a drop, like a precipitous drop in QQQ, you'll get a precipitous drop in SPY, and as a result from the ETF sell-offs, you'll get a precipitous drop in Dow. And because the sentiment will completely reverse, you'll also get just a broad-based equity sell-off just because these 10 companies.
well, all the other stocks have already been sold.
Well,
So,
Nvidia's revenues for November were 55.93 billion, beating the estimates by 2.6%. Then in Fab, they were 6.051 billion, beating estimates by 0.6%, right? And then the estimates for next quarter are 6.5 billion.
So they're up.
Well, yeah, Nvidia raised their guidance.
Oh man.
But this
All
is
right.
also Nvidia's quarter one earnings, not their quarter. The last earnings was their quarter four.
Why'd they revise up the thing is, I don't get why they revised up their earnings. Like
Because they wanted the pump, because they were doing a share offering. All the other tech companies upgraded their earnings this quarter, but Nvidia was first. So Nvidia went ahead of the pack and raised guidance before everyone else did, right? And then everyone else raised their guidance in Q1.
I don't under.
Which means Nvidia is best positioned to be wrong.
And this kind of comes back to, I need to look at a chart of beats, like earnings beats throughout like the dot-com bubble, like heading into it, 2008 and all these things. There's like a dance between analysts and these CEOs, you know, and I think that all really an analyst is just a really informed individual who, you know, has their ear to the ground so they can, and they basically just
They're
place
less
their estimates
informed
around
than you
projections.
think.
Well,
Yeah,
they're
I
basically
have to
estimating
run,
around
but I'm going to
projections.
reiterate. I don't think that the current pump is largely being driven by information. I think it's being driven by hopium and sentiment and speculation. And I think that they're going to continue to give them a pass. I mean, you
I
look at
don't,
the analysts are already, analysts are already just like, holy shit, we already hit all of our, 1 and 2 year price targets, and they're just raising them again. And that's all it's going to take for a lot of people. They're just like, okay, you should diversify into AI. You know, Nvidia is still under price targets. Let's add it. Let's add a few percent.
Yeah,
so,
they
so
are
this is,
just Uncle Diesel's right. They are just salespeople.
so, and this is the interesting thing, right? Because of all the beats the first quarter, right?
Mm.
All those beats, right? The average projection for earnings, like it was like the worst analyst expectations since like April 2020. All right. So beating on that, is that necessarily bullish, right? Like, and just barely. A lot of companies just beat by a little bit, right?
If companies are investing in AI, it could help Nvidia's earnings. They have to grow 8%. They have to grow 8% quarter over quarter to meet the expectations.
Yeah, and not only that, but the major tech companies that would be a boon to Nvidia's profit margins are building their own chips.
Yeah, they've all
So
declared
they're
that
not
they're not buying
investing in.
chips from Nvidia. They did. They all did already buy chips from Nvidia. That's the other thing that people miss is they think there's like this increased demand on Nvidia GPUs, Greg. It's not there. All those companies already invested in that. There's no new product, and the H100s are like a scaled down version that they made to sell to China, which the Chinese don't want.
Yeah.
And they had to make that because of the executive order to block the sale of artificial intelligence chips to China. Which I
Yeah.
believe this quarter is reported, if I'm not mistaken. So we're going to see, they're going to have to overcome the effects of the embargo on Chinese chip selling and beat earnings quarter over quarter by 8%.
Yeah, and the question too is like we have this AI push, but still, and I think Jay Fresh was alluding to this, where's the revenue coming from, right? Subscription based revenue, right? Maybe, but as soon as a generative chatbot is open sourced, that revenue's gone, right? As soon as AI becomes efficient enough that you don't need crazy server farms except for to train them, right? So you train your model, and then you have your model. Now you don't need these giant server farms anymore. So what are these companies going to do, right? There's going to be some specific, like that's what Google, I think, and I think it's mainly Google what they're doing, and Microsoft to a large degree is they're building these server farms for the training of these AI models. That is the service they will offer, right? That I think that's the way they're going to try to generate revenue with this. But the problem is that that takes a lot of time and infrastructure to put together. It doesn't just happen in a quarter. And I get that the market is forward looking, but I don't necessarily see that revenue being significant, right? Once the Chat GPT hype dies, right, then they have to go and they have to figure out how to actually make AI profitable once Chat GPT dies. And
Yeah.
offering Bard for free, and then Microsoft Chat GPT thing, they're basically offering those things for free, and you're the product by training their AI model, but that's still just a chatbot, right? That's not necessarily generating revenue.
Yeah.
So it's we're still in a very big gray area, and I understand the forward projections are very profitable if you can find like a service, whether it's AI model training or specific AI, offerings, they're still very far out. They have not been conceptualized, right? It's very speculative right now, and I think that if a revenue stream has not been created from AI in the next 2-3 quarters, then that bubble is going to deflate.
Yeah.
It may not deflate quickly, but it'll deflate. The sentiment will turn sour.
And
So, I'm not.
I do not like their cash flows, and I do not like their net margins.
Yeah, the net margins have been contracting crazy fast, haven't they?
Well, they expanded, and this was a lot of it. It was like in Q4, we saw net margin almost double, right, over Q3s.
Yeah.
But gross margins are still, way off where they were in like 2022, right? And then now we're going to be weighing year over year on Q1 of last year, right?
Mm-hmm.
On Q1 of last year, net margin was 39.29 versus Q4 23.37.
Okay.
And
Yeah.
inventory turnover is down by a whole percent. That's 2.99 versus 3.98.
Yeah, it doesn't scream growth, does it?
No, I don't see how they meet their own expectations here. I'm not gonna put it past them. Like I'm gonna hedge, but I wouldn't put it past them to pull something out of their ass. But it does not look good to me. And if it's not this quarter, it'll be the next. And I have enough theta for both. So
I mean, it's definitely one of those things, right? I mean, and like an equity bubble, right? They don't necessarily tend to pop fast. They tend to deflate. And this AI bubble will definitely be a slow deflation type thing that would happen if a revenue stream hasn't been created for these large companies. You'll get quarter over quarter misses on their growth targets from way back when. They'll have to update their guidance, that sort of thing, to be more realistic. And that's kind of, it's just a slow return to reality, which I mean it's not like the world's best thing for put buyers, but it's definitely nice for people who do want to buy the dip and do want to invest in a realistic vision of AI.
my counter to the AI downside: brother-in-law is a Silicon Valley lawyer whose buddy works as a high-ranking legal at Nvidia on the software side, and says theirs crushes GPT, etc. Okay, but who's buying it? That's the question, right? Like no one's there's no buyers lined up.
Yeah, you could like you could
So
make
you can only
sports car
promise
in the
forward
world.
earnings for so long before they go unrealized, right?
Well, and you can create a product that is beyond awesome, right? But if you show that product to people and they're just like, "Great, what do I do with this?" They're not going to buy it, right? I mean, it's just because you have something that works great. Yes, you can offer it, and you can probably generate some sort of revenue off of that. But I don't see, especially just Chat GPT, right? We're still so focused on Chat GPT, but that right there alone is just a freaking chatbot, right?
Yeah.
So it's
I mean,
just theory.
even like all the like founding fathers of like the machine learning field and all the current researchers all say that we're still, you know, years, like 5 to 10 years out from any actual like intelligence models, right? So these things are very good at like spewing out information as they understand it based on what they were trained on, but they're not creating anything new.
Yeah,
Right,
that's the
they're
biggest
not
problem.
able to think on their own, and they don't really inherently generate any value.
Yeah, you can't ask Chat GPT, hey, I have this company, how can I increase my revenue? It's going to tell you what you already know.
Yeah.
Like it's not, yeah. So that's the problem, right? And that's why I'm saying, where's the revenue? It's not just there has to be a mutual benefit for all parties involved in order for there to be an actual case for economic growth for something, right? When I see Chat GPT, I don't necessarily see a big fat economic growth case just for this little chat bot. I see it for other things, but those things, once again, training the models, or building the model training systems takes time. It takes time and infrastructure, and I see that being priced in, that growth, but the projections are way too near term for my liking, right? And I
AI
want to
sim 3D TVs. Sorry.
yeah,
Well, I mean,
I
it's
don't
no, it's yeah. I mean, it being priced in now is it's really no different than, you know, like blockchain, right, or NFTs, or um 3D printing back in like 2014, 15. You know, it's just like there's a lot of hype. I'll agree with that, and the hype is more than expected, but there's still no money. There's no money
yeah,
being made off of these products. There's no tangible value.
yeah. The only money that's been made has been open AI making money off themselves through very shady bookkeeping, right?
Thanks, Beast Stanfin. I think these are all just walk-in. He's been banned from the chat, so he's ko-fiing extra hard now.
Yeah.
I'm not saying
Still not
AI's.
bullish
I'm
on
not saying AI is a fad. I'm saying that the pump and the narrative surrounding AI currently absolutely is.
Chat GPT is the fad, right?
Yeah.
AI be damned. No one really cares about AI right now. They care about Chat GPT because they can pop it up on their phone and interact with it. It's kind of like it's like the cool thing about it. It's the first real chance for the consumer, because AI has been around for a while, but this is the first chance for the consumer to get a practical sort of experience with AI, right? So that's where the hype is coming from. Is you have executives who can play with this AI, and they're people like what's his name, Kevin O'Leary, right? Where they're like, I like this. This is cool. I'm going to buy 10 million shares of OpenAI, right? It's what's happening, and it's not sustainable, but it will allow for a lot of financing stuff near term, which will be nice for these companies. But I see already the disappointment that is going to appear when these companies don't have their revenues grow exponentially from here on out, thanks to their implementation of this really cool chatbot.
Yeah, I mean
Right.
the market's pricing in 500 times growth on Nvidia by 2027.
That's insane.
Right? Like that's the problem. It's not AI, and I really hate that the narrative leads there. But yes, I mean Chat GPT is not, it's not a general intelligence system. These aren't solving any problems that a solution doesn't already exist for, right? Um and yeah, it's not all it's hyped up to be, but it is cool, and it's a useful technology that will have value in the future. I'm not denying that. Um, but it's not going to have any of the near term value that investors are expecting.
Yeah.
It has been aggressively overpriced in the market. I mean, this is infant technology. Like it has so much more growth potential, but right now it's not generating any of the revenues or value that's being priced in for it, and that is going to leave people you know disappointed, especially if they're buying Nvidia at $300.
The surprising thing to me too is this, right? Like if there really was general AI hype, which I mean, there might be, but like, if there was general AI hype, then Upstart should right now be trading at, I want to say like 45, $50 a share, right?
Yeah, I mean,
So there isn't an actual big risk on into everything AI. It is purely companies that have released or referenced to providing infrastructure for Chat GPT, particularly, right?
yeah, I
That's
mean,
that's
well, you also have Palantir that's using, like, AI currently to generate revenues, and those revenues are not insane.
They've been doing it for a long time though too. They've been around longer than Upstart, and they've been using AI stuff for quite a long time. You know, um, like my brother, he utilized a lot of Palantir technology, and it was really cool because it basically does what Chat GPT does, but just in a way that is more it's geared towards Intel, right? So, something like maybe you say a name and then it'll pop up with like recent images, locations, times, all these things, and put it in an easy to read display. That kind of stuff. It's already there. It's already been being used. And they are making money because they're selling it as a service to the government, right?
Yeah.
ChatGPT, it's like shitty Palantir, right?
Well,
It's
I
not
mean, a lot of it's you're pricing in what is essentially a pivot by so many of these companies, right? I mean, like Google, there's an argument. It's a software as a services company. They're an advertiser primarily, but they do software as a service. Microsoft, software as a service, right? They are SaaS through and through. Nvidia is not. Nvidia is a chip manufacturer that's currently unable to sell chips, right? So you have these gross, like even AMD, and by and large, for most of the people I've heard or talked to that work in machine learning, the cost to benefit of AMD chips is far better than Nvidia chips. Nvidia chips are 3 times the price, and only moderately better, and they have a significantly larger energy consumption. Um, so that's already something to factor, is that there's already a ton of competition over the chips, right? Nvidia's inventories are packed to the gills, and they're saying, forget all of that. Forget our bloated inventories. Forget the fact that our revenues are declining. We're going to start selling software as a service, but they have no client lists. They have no long-term contracts. Like just recently they announced that deal with what's the company called? They do like retail, like POS
Oh
systems and
yeah.
shit. And they're a pretty big company. They're like 100 billion market cap, but there's no actual deal. They're just like, we're partnering with Nvidia to work on using AI to enhance our software as a services business that we're already selling, but there's no actual deal. It's not like we're giving Nvidia $300 million a quarter to facilitate this X, Y, or Z process, right? They're just saying that we're going to work with Nvidia and see what they can offer us, right?
Yeah,
So
we have
it's
we have
it's a PR statement, but it's not leading to any actual real revenue.
yeah, it's the classic. We had a meeting to schedule the meeting for the next meeting. Yeah,
Yeah,
it's
yeah.
it's vaporware at this point, right?
I mean, it is, because most of it's fucking open source. Like how much
Yeah,
how much actual profitability there is there that can't just be mimicked from the open source software that's already available?
which is very little. I mean, from a consumer standpoint of this thing, I mean, once again, there's a case, but right now, like as I see it, with the horse blinders on, looking 6 months ahead, yeah, there's just not any sort of actual infrastructure to to pump revenue into companies using or with the
CUDA,
assistance of AI.
this is Nvidia. Plex says Nvidia's only mature software stack for AI ML programming. CUDA isn't open source. Okay, but other stacks are being developed, right? So Nvidia is not alone in the space. They're not even first to market. I mean, there's other mature software stacks, right? Like we already discussed Palantir,
Google,
Google,
like Google has a whole platform, like a whole web-based platform you can
AMD.
go on and program machine learning stuff.
They also
Like,
have the data, which is probably more important than the platform or the
yeah, you can
chips,
you can
as the
you can
data
utilize
for these to learn off of.
you can utilize Google's libraries of training sets, for your ML application that you're coding in their platform, and that's like they already have they even have a training course for coding machine learning and AI stuff in Python. Like Google has like a full-on training course of videos and stuff that you can watch, and you use the platform. Like they're already set up for providing AI as a service, and they have been for like 6 years now. Those videos have been out for a long time, and the fundamentals haven't changed. All that happened was somebody made a gigantic language library and trained a neural network on it. I mean, not a generative neural network, generative adversarial neural network on it.
He says,
But
yeah, but years behind, nothing comes close for hardware layer to C++. But that's just what's publicly available right now. First to market doesn't mean beat the market.
Uncle Diesel, Microsoft owns GitLab and now OpenAI. How and are
They don't own OpenAI, right? They just
yeah.
invested in them.
Yeah, I was about to say that's the first thing, and also the FTC doesn't necessarily understand the sector adjacency, and they'll probably figure it out when it's a little too late.
CUDA
Or if there was a
SDK
buyout
has
deal,
monopoly, which is why AMD has better efficiency but no traction. Hmm.
Yeah, I don't know. I'm not very bullish on QQQ right now.
Yeah, I'm not either.
I might be a buyer at 250, like that's, or 275 if this thing takes like 2 years to deflate. I mean, maybe, but like 336. Eek! Yikes! Wow! Once again, I have to bring this full circle. It drives me crazy that we still talk about exponential growth in revenues in these companies that are doing new and innovative things. I like innovation. It's cool. It can spur growth, but for fuck's sake, can we please zoom out and just look at everything again, just to bring it full circle? Like, how can you expect a fucking like a 500% increase in your goddamn revenues when in the backdrop we have like this brewing currency slash debt fucking whirlwind of shit, credit crunch, fucking overpriced assets.
Yeah, like who's gonna fund the growth?
Yeah, like where's the money gonna come from? It's crazy. It's crazy to think that that's gonna happen in the next 3 to 5 years.
We're gonna price in $4 trillion of growth into Nvidia in 5 years.
It's insane.
4 years.
It's absolutely crazy. Yeah, like it makes no sense. Like it's like everyone's got like it's like they've got laser focus on very specific things and not the big issues. Maybe it's just because they're hedged for the big issues, but I don't necessarily think so. I mean, these fucking asset managers, man, they're really shitting in our cereal here. God, drooling, dribbling idiots slapping the buy button. I don't know. I think it's partially that, but yeah, the hype is too crazy. It is not being tamped down by reality in any respect, and it's really frustrating to see because I understand that a lot of the money being pumped into these stocks is not the money of the people that are doing it. These are flow trades that are going into it. These are other people's money that they're stuffing into Nvidia.
Yeah,
and that angers me. Like they're totally fine detaching themselves from reality as long as it's not their money.
Well, I mean, they just need to keep buying things to keep making fees, right?
Exactly, and at the same time though they're able to pump the prices of all their equities implicitly, and it's just terrible. And it really, I hate. I mean, I love being tinfoil, but like the tinfoil like this just makes me angry because it involves tens of millions, hundreds of millions of people, like so many people that have money in 401ks, Roth IRAs and all those things that are trusting their money managers essentially to go and invest responsibly. And this is what you get. I mean, this is the bulk outcome, right?
Yeah,
Ultimately,
it's problematic.
It's super problematic. It's not just problematic, dude. It's insanely irresponsible. Like, it's incredibly dangerous. And the worst part is that all the big money managers, except the few that are stupid, are going to come out okay because they're able to slough the losses off onto their customers. It's just awful. I really.
I mean, I remember like the first time it really hit me when I did that. Like, and somebody just looked at me and he said, "Who gives a shit? It's not your money." um, and I think that was the first time, like in my 20s, where I was really disillusioned with finance. You know, I always thought it did all these great things that made people wealthy, and you just had to stick to it. And then I heard that, and it kind of just brought it all back to the ground.
Yeah, they don't give a fuck.
Not at
Like,
all. It's
it's so
predatory. It is. Yeah.
it's incredibly predatory. Not only that, but it
It's
leads to
it's incentivized predation, right? Like you don't want to
and
manage your money, so you give them the
not
power to do it.
and not only that, but the Fed, through keeping interest rates insanely suppressed for well over a decade, incentivized overweight equity positioning, by fund managers, the whole entire time. Basically just telling everybody, fuck bonds, go buy the fucking stock and shut the fuck up and make pumpies and equities. And treasuries just got
Well,
the
I
shit
mean,
end of the.
also, how can you maintain your client list? Let's think about it this way. How can you maintain your client list doing the safe thing right now when
Yeah.
other people are willing to take the risk? If you look at if you're looking at two funds and one of them's chasing equities that are pumping and they're up 20% year over year, and you're looking at another fund that's buying into like long-term bonds, low yield bonds, right, and taking money out of equities. The safe choice is, obviously the latter, but uh, investors are incentivized to go with the unsafe one,
Well,
and
especially
they
after
don't
all this
know
time.
better, right?
After 15 years of pump, right? We've had 15 years of people coming into the workforce, investing in their 401ks, all these things, and they have been conditioned to believe that risk on is modus operandi for the entire stock market. It didn't used to be that way. I mean, like the last time that really happened was the Great Moderation, and we know how that ended with the dot-com bubble. Like, it's just another one of these cycles, and everyone's so confident in their employment that they're levering up. I mean, it's starting to tail off a bit, but still, like, it's all just a self-replicating sort of system where we incentivize risk on to the point where it reaches a head, and then there's a massive panic, and by the time everybody's panicking, they've already lost everything. Normal people I'm talking about, not like active traders. I'm talking about like just normal mom and pop who are investing in their 401k and pension plans and all that shit. Like those guys, they're clueless, and they're not going to find out until it's too late. And it's just a damn shame that we don't have any sort of regulations in place to prevent this sort of extremely risky behavior.
Some of this rhetoric
Ugh.
doesn't give quite enough credit to people in general and the ability to learn and process information that's readily available. That's true. Yeah, it does
Mr.
ignore
Poopy
the
Pants.
average person's ability to learn a little about the market and manage their own money, which some people are capable of, but it also it requires uh, capital preservation and risk management strategies that, as we have seen, some people are not successful at, even given the knowledge necessary, right?
So,
I mean,
so
I
Mr.
think we've
Poopy
given out more than enough information on the stream for most people to build a sustainable income account, right? But how many people can actually do that in practice?
Not
It's
only
not.
that,
You can have all the information in the world and it's still not easy. Like
and
it's
not only that,
60/40.
so Mr. Poopy Pants, I implore you to find a regular person, Joe Schmo working at the gas station, and ask them, hey, or maybe not Joe Schmo the guy, middle management Joe Schmo, I implore you to ask them, hey, how much interest do you have in actively managing your stock portfolio? And you know what they're going to say? Fuck that. They're not going to do it. They do not want to
Yeah.
touch this shit. Like, the people I'm
But
talking
they
about.
also, they don't realize the value of compounding gains. They don't understand how much they could multiply their, yearly salary over a 10-year period, right?
Yeah, I mean, well, it's just like I can also say that everybody could learn calculus. It's true, but are they? No, because they don't have time for that shit.
They're
They're
gonna
not.
say
They don't
what
want to work.
stock portfolio? That's also true. I think that's something that we ignore a lot. Most people are
Yeah,
not actively exposed to markets. I think the majority of people are not actively
unless they're
exposed to markets in any way. Um,
unless they're working with a pension. If they have a pension plan in their business, right, and they're just automatically contributing to it, that then they're exposed. But even then, they don't realize they're exposed until the company says, "Hey, about that retirement we were saving for you."
oh, I know it is poopy pants. I can see the capital flows. I know where the big money is going, and I know it's not going to equities. That's why I stay bearish.
And gas.
If I saw that trend changing in any substantial way, my position on the markets would change. But we haven't, right? We still continue to see capital accrue in money market accounts. We continue to see, the Fed's lending windows close, and that liquidity is just getting pulled back inch by inch. It's not going as fast as we would like, but it can also speed up out of nowhere, as much as it can pivot out of nowhere.
Right. And this comes down to relative performance too, right? I mean, that's part of why you haven't seen a rapid inflow into money markets, even with interest rates as high as they are,
No, we
is
have.
because the market has sustained.
There's been a substantial inflow into money markets.
It has been substantial ever since the bank collapse. There has been an inflow, but that's just because people are actually starting to manage their risk, right? If the relative performance of the indices starts to turn down again, especially with the higher propensity to move into money markets, you could see a more pronounced flow even than we've seen into money markets. But I mean, the thing is that that'll also mean that we could see more violent bounces out of the money markets into equities if they do start to perform again.
Is that flow into money markets really a lot of retail? Not entirely. No, it's a lot of pensions. It's a lot of 401k managers, right? It's retail accounts technically are still buying into equities while institutional money pulls out of them. And that divergence is strong.
Yeah, we're seeing dumb money flow in still.
Yeah.
And Gaff, yes, that's exactly what I'm saying. That the market is stacked against itself because capitalism is inherently greedy, which forces risk-on approaches at all times for all people. That is absolutely what I am saying. It is absolutely correct, and that's just inherent to human greed. And I'm not going to go full walk in here, but yes, I mean, it's responsible for boom bust cycles.
Well, we're never going to have a world where we don't have those. At least
Exactly.
not anytime soon. So the best you can do is manage them.
Exactly.
Yes, yes, bipolar bear. We know you love the 401k. The point though is that at some point you need that money, right? And you hope that that money at that point is worth more. But if the market crashes to 2600, 2400 and stays there, the last 6 years of performance are wiped out, and they could stay wiped out for some time, right?
It's
As much as you want to invest in fixed income, you know uh, you can still lose value there. It's not a perfect solution. It might be a
and here's
safer solution and over a longer time horizon, better, but it's not always better. If you were scheduled to retire in 2011, 2010, where would that have put you?
Yeah, and it's not only that too. It's and this is the real economy as well has an impact on all this. If unemployment starts going up, we will see equity valuations go down, right? People need money. to live. And
They definitely need money to buy everyone's shit.
and they need money to finance all their debt, right? So the moment someone takes I don't know what you get paid from unemployment. I think it's like you take a 40% haircut on your income or something like that. As soon as that happens, right, people will immediately start hemorrhaging money and need to offload those assets
I
that
mean,
they have.
default rates will just skyrocket, right?
Oh yeah,
Unemployment can't sustain the average American's like household debt.
no, I mean, well, like most, I think it was something like Gen or
And
I forgot what they
savings
call
are still like almost at rock bottom.
it. And also mortgage payments. I think the average mortgage payment nowadays is like 40% of people's income. And new cars are, I think it's for the younger generation. They're pushing like their car payments are like 20 to 25% of their income. Like that's not sustainable at all. And if those people lose their jobs, they have to sell their cars immediately. Someone with like $1,000 car payment, who makes $4,000 a month, right? $4 or $5,000 a month. You take a 20 or you take a 30-40% haircut on that income, that $1,000 car payment all of a sudden is way shittier, right? And not only that, but your $2,500 mortgage also becomes insanely bad.
Yeah.
You barely have money to eat.
I mean,
So,
you're talking like $3,000 and $4,000 a month mortgages.
oh yeah, for sure. I mean,
Yeah,
yeah, people
five,
work in tech.
six. Yeah,
So yeah,
you're not paying those as a part-time job.
yeah, and then once those assets get repriced, right, purely out of necessity, which is pretty much the only way they're going to get repriced is out of pure necessity. Once those assets get repriced, then you're going to start getting valuation changes in the equity market as well. Like that's sort
Yeah.
of one of those places where the real economy sort of intersects with the fake stock market economy. So that's going to happen as well. There's going to be like all kinds of weird knock-on effects to equity valuations, especially of banks or lenders, lenders of single-family homes, which is mostly regional banks, but also larger banks. You'll see them have to, do some fancy bookkeeping, but for the most part, that bookkeeping will be them selling their stocks, right? It's
Yeah.
a weird, fucked up, convoluted web. But yeah, ultimately, it is not sustainable, uh, and I don't really, especially now with credit conditions tightening further, overnight lending becoming harder for banks, and just overall like the difficulty of borrowing short, lending long, right? It's a losing game for the debt market, and I
Yeah.
don't see this ending well. I
No,
don't see it ending well.
I
I
agree.
don't care about the debt
I
ceiling.
mean,
Like,
I prefer to generally stay more focused on the near term because you get too far out in the future and it becomes wildly unpredictable. But I would say yeah, our current structure of debt and credit in this country is not sustainable over the next probably 30 years, and we will have to fundamentally reevaluate how that works at some point. We'll be forced to. Is that going to be now? Is now the time? Maybe. I mean, we still very much have the ability to kick the can down the road for the next generation, and we'll likely resort to that before admitting defeat, right? Because greed is the driver.
right. Yeah, that's the thing is like, does it happen at 150% debt to GDP? Does it happen at 200% debt to GDP? When do we finally say it's just, the shit is already hitting the fan, right? The longer we kick the can, the worse the problem is going to be and the harder it's going to be to solve.
For someone who can afford to dump 5 to 10K into market downside, how long do you think before returns are positive? I mean, that really begs the question of what causes the market downside, but uh I would say that right now we're probably still positioned for a shorter recession, maybe 1 to 2 years. So I think returns could be realized in a decent, provided your timing on entry is good, within a decent window. 3 to 5. If we're in recession for 1 to 2. Obviously the choices you make on what you buy are going to be very important, um, because they have to survive a recession of 1 to 2 years. But yeah, I would say right now it doesn't look like we're staring down the barrel of like a 5 or 10 year recession or anything like that. I think there's far too much just liquidity locked up right now that will be brought to bear, frankly, for us not to have another bull market within the next 10 years. Far too
Yeah.
much liquidity. And I think when we do hit a bull market, it will be fierce.
Well, that'll depends though. I mean, if inflation stays high, right, and we enter a stagflationary period, it could be protracted.
Yeah,
That's
but
the
we're not there yet, right? Like the Fed can
yeah.
still respond to those conditions well in advance. Obviously, yeah, if we get trapped in a stagflationary environment, then everything becomes, the recession itself becomes more prolonged, right?
Yeah. Yeah, that's the thing I think everybody's really waiting on,
What about
right?
the
Is to see. Oh, what's up?
Oh, sorry, I was just reading a question in chat. What about all the talk of having been in a recession for a year already? I mean, we kind of are. We're not, because GDP is remaining high, right? Unemployment's remaining elevated. We're not getting an official recession. We have like an earnings recession that is ongoing. Um, PEs are not appropriately valued where they should be. So and there's a recession going on now, in the industrials and manufacturing side. But yeah, GDP is staying elevated, right? And keep making money, and inflation helps that. I mean, you're more likely to see the effects of a recession when inflation starts to fall off than you are while it's climbing, right? Especially if corporations are all taking advantage of inflation and using it to increase profitability.
Yeah, we've had like these. It's been like a weird like leapfrogged sort of fractured recessionary thing, right? Where we've had the margin recession or whatever, the growth recession. Yeah, all these different little things, right? And it's true, there hasn't quite been enough information to say we're in a full bore recession, although dropping real income, right, is like real wages dropping is sort of, I think, still the alarm bell that we haven't quite hit a real recession, right? If real wages continue to drop, but inflation continues to stay high, we will see a shift in consumption habits, and we're already sort of seeing it, as I sort of illustrated with that chart earlier. But it hasn't gotten to the point where uh, personal consumption expenditure growth is outpacing money supply growth. And that's where I think we would have probably the clearest indicator of a recession we could possibly have.
Yeah. I still think we need to see unemployment come up before we get anything official.
Yeah,
But I also think
absolutely.
we'll start to see higher unemployment over the next, once we start getting those year-over-year unemployment reports going into this summer. So I think over the next few weeks we may see a higher print in unemployment. I don't know if it'll be sufficiently large, but 0.2 to 0.5% is possible.
Ooh, 0.5%, man. That would be
Half a
that would,
percent is officially a recession.
yeah. That would be
Um,
big bear.
yeah,
I mean, honestly, even like a 20 basis point or a 15 basis point increase in unemployment is big bear, right? I mean,
yeah, it is.
the ripple
But
effects are far
not
reaching.
officially a recession, right?
Not
I mean, the
yet.
longer you can stave off that narrative, the better.
Oh yeah, it's purely sentiment at that point, right? I mean,
Yeah.
there's a point where unemployment will affect asset pricing and equity pricing and all that, but before that is, uh, pretty much just sentiment driven stuff, right? So if unemployment starts ticking up slowly, it could lead to deteriorating sentiment. But yeah, it wouldn't necessarily be a recession, but it could end up being the catalyst for the self fulfilling prophecy, right?
And Varex Plex is correct about leasing, by the way. Also, people with money don't like to buy depreciating assets. So even if lease terms are unfavorable, frequently they'll lease new cars because you can write off the depreciation. Well, if you own it through your business, you can.
Man, I should have set up a shell company and bought my car through it.
What percentage of mortgages are held by the Fed? MBS? They haven't bought MBS in a long time, right? Um, so it's probably not well, it's probably a big chunk of the lower interest rate and older MBS securities, but I don't think it's a significant chunk of all existing mortgages. I mean, across all of the banks, yes, but the Fed itself.
Doesn't the Fed have a large holding of CMBS?
Mm, yeah, I mean, well, yeah,
That's
but they're
scary.
also offloading those securities, right?
Slowly, yeah.
Yeah, very slowly, but uh, they can always pick up pace if they need to quantitatively tighten more.
They're not gonna. They're too scared. That's the
I mean,
fears.
some of it's not up to them, right? Like the toxic shit from '08, like that's just being constantly unloaded, whether they want to or not. The problem is they're not selling anything else on top of that.
Well, yeah,
They're
like
just keeping it
it's
at
not.
that bare minimum trickle. But I mean, yeah, they'd upset the liquidity issues that banks are already having significantly if they started
Yeah,
dumping large swaths of MBS.
yeah. That's why they're never gonna do it. There's two like it's kind of like you were saying about like existential threats are not priced in until they absolutely need to be.
Yeah,
So like this is kind of one of those things, the the result is so fucking scary that you just don't even want to financially consider it, right? You don't want to put your money in that basket because especially for the really big boys who do depend on broader sentiment to support their positions,
yeah,
admitting defeat like that financially is a huge red flag to the broader market,
yeah. It is.
and it could end up triggering what you're scared of, and so you
It can
can't.
worsen the effects of what you're scared of.
Yeah, and so like it's definitely a very delicate game where I can, I have a feeling, especially with this derivatives based long positioning that we're seeing, that is the fear, right? People want to be able to get the fuck out of their positions as fast as feasibly possible, which is what derivatives give you. Um, and you don't do that when you're bullish, right? What you
Yeah,
do when you're bullish is you go long, you risk on, and then you buy crash protection, right? So puts should be more expensive right now, but they're not,
nope.
right? That's what does that tell you? It tells you everything. So yeah, not necessarily bullish,
No, I
synthetically
agree.
bullish.
I think
I'm a
one last
synthetic
thing I
bullish.
wanted to bring up before we end today is, and people should understand this, is regardless of the outcome of the debt ceiling, whatever route the politicians take to get to a resolution, whether it be the 14th Amendment or extensions or coming together over agreeable terms, the fucking Treasury is broke. Um, and they need
Yeah,
money, and they don't have tax revenues coming in at a sufficient rate. So that means they're going to issue securities, and the issuance of those securities will drive up yields. And yields are already arguably outperforming much of the expected S&P returns over the same time period. If the Treasury starts selling securities in mass, those yields are going to skyrocket. Um, and all of the things that the Fed has tried to prevent, the duration risk with the banks, and getting, yields getting too out of control, by, slowly bleeding up the federal funds rate, will be brought to bear anyway. Like I said a few months ago, this is really a fight between J. Powell and Yellen. someone's going to get the blame. And if the Treasury needs to refill its coffers, the Treasury's going to get the blame. And J-POW gets to walk away scot-free. So if anyone's hoping for a technical default right now, it might be Powell, because if they don't by the FOMC meeting, the FOMC might have to take a bit of a harder stance on inflation.
Yeah, I mean the whole people are talking about it, so I'm not going to say people aren't talking about it, but it needs to be considered that what's happening right now with this debt ceiling talk and allowing the treasury balance to get so low is that they're basically just going to sell shit tons of T-bills and spike yields, and it's going to put a lot of near-term stress on the financial system. So it's gonna cause a spike in risk for another bank failure, and things like that. So I think people are saying it's going to be equivalent to a 25 basis point hike. I don't know how they get that number. I think it's just more going to be
I
that
think it
there's
would
going to
be
be
more significant than that. The Treasury is quite underwater right now.
yeah. I think in the near term it'll be more significant than that. I
Yeah.
think that
It
they
might be
describe
more
it.
equivalent to like a 0.75 reduced to 0.25 over, a few quarters.
Yeah, absolutely. As that near term duration risk sort of diffuses, but I think a better way to put it
First of
is
all, go back to our thesis or my thesis or whatever about, these inflation swaps and these treasury shorts, and remember that the floating rate risk on a large yield pump will increase massively for anybody counterpartying the inflation risk of those maturities purchased back in 2016 through 2020. And remember that those aren't falling off at a very significant rate yet. They will start to into the end of this year. The maturities on those will start to fall off and they'll become less of a liquidity risk. But in the near term, that's a huge amount of floating rate interest risk packed into those swaps. And if CS and JPM and these banks are significantly exposed to that, it could be quite the event.
yeah, liquidity go kerplunk.
Yep. And
But
so I know everyone's really used to looking at things as having, binary, like this is bullish, this is bearish outcomes. But there's some things like this debt ceiling that doesn't really, all the outcomes are bad, right? All the outcomes are bearish. Some are just more bearish than others.
yeah, for sure, it definitely feels like that. Just like the economy though too. Like I don't see a bottom in our economy forming, right? That's not what I see when I look at the data. Uh, I see the downtrend forming, right?
Yeah.
The local top is in, and we're already headed back down, right? Inflation is sort of, I think, inflation and unemployment are the last things, but yeah, the debt ceiling thing, I think they're going to pass something, or Biden's already got some 14th Amendment bullshit drafted up to push the debt ceiling up. But
After they do that, what happens? It's just going to go to SCOTUS, and they're going to go, oh, the debt ceiling was bullshit anyway, and then that's the end of dealing with this debt ceiling nonsense. Like I kind of wish it just would, so I don't ever have to hear about the fucking debt ceiling again. The fact that we have one is ridiculous.
Yeah, like I hate the undue volatility from the debt ceiling talks. Like all it is it just injects volatility into all the markets, and then it all goes back away over like the course of a few months, and it's really infuriating. I'd much rather just we admit defeat, we're in a debt spiral, and that's just the way it's going to be until we fix our spending.
Yeah, we're never going to spend less. The only real argument that ever goes on is what are we going to spend more on, right?
Well, that's how we fuel our economy.
Yeah.
We have to keep spending more and more. I mean, that's the thing is we've modeled our economy after infinite growth, which is naturally unsustainable.
I mean,
but
the real solution is just raise corporate taxes by like 30% and force them to pay.
Yes, I think you're right.
I mean, but when, right? It's real hard to get through all the through all the well, it's hard to get through the fact that all the politicians are owned by the companies fighting against that.
Yeah, exactly. So big challenge. And I mean, I think that the bond market right now is near term bearish, right? Just because of this debt ceiling shit. Equity market, I'm not sure. I mean, there could be some knock on effects like over the course of like settlement periods, as that sort of liquidity drop works its way through the plumbing of the markets. But I'm not necessarily, super duper bullish on my puts.
How do
The only
you?
reason I'm bullish on my puts is because as the debt ceiling talks approach the cutoff date for the Treasury General account, the risk of a default will have to be priced in gradually more and more. I mean, it'll still be near zero, but it'll become further from zero, right? To some non-zero number that's slightly higher, and that could end up making equities go down.
Yeah, I mean, well, institutions are going to risk off as the debt as the risk increases.
Yeah, exactly. That's pretty much what I'm saying. Yeah,
Yeah,
there's going to be
repositioning
more.
to the bear side is more than sufficient for a turnaround in the market. Here's the last question for you. What do you think JPow's response needs to be if an agreement is reached?
He needs to pause for a quarter.
He can't.
I know, but he needs to. I mean,
But
if he wants to keep,
you know what the dollar will go down to, right?
I mean,
Like
hopefully to
you're
the.
gonna wreck Poopy Pants argument if the Treasury starts refilling, especially if
I
they do
mean,
it at a rapid rate.
and that's why J Pound. I mean, I guess yeah, he does need to raise in that situation. I don't know. I feel like a pause would
I feel like
improve
he
financial
only has the
stability.
option for a pause if there's a technical default, and that's just to offset the catastrophe, right? But I think if that agreement is reached, he needs to be more hawkish.
That's true. Yeah, I guess so. Yeah, because the refilling, yeah, it will weaken the dollar, and
Yeah,
he'll need to.
oil will skyrocket and inflation will follow suit.
Yeah, well, I mean, yeah, and import prices will go up for at least a quarter.
I'm not really asking you because I don't know, right? I'm just asking you so people can think critically about it, like, or at least strategically about how this will affect dollar value and thus export oil value, right, or import oil value.
Yeah,
Um,
it's a good lesson in gaming through scenarios, right? Which is
yeah.
all that big funds do all day is they just game through what can happen if this happens or that or this, right? And they plug them into their computer model.
So best case scenario, resolutions reached this week. The Treasury, still has tax receipts coming in, but they do have to issue a significant amount of securities in order to stabilize the general account. Those securities are issued as even as needed. They will still be issued at a rate which will increase yields and drive dollar value down, right? Because the U.S. needs more money, so the dollar's worth less. And I think the only appropriate response from the Fed in that scenario to stave off a secondary spike in inflation, which we've talked about for some time, is to follow through with a more hawkish rate increase. And I don't think the 2.5s and the 7.5s that we've been seeing are going to be sufficient enough to sustain that.
Yeah, it's definitely we're trying to stop a very fast moving thing. Or maybe not stop, but slow down a very fast moving, very heavy thing. And it's quite a challenge, right? It's kind of like trying like a don't look up, trying to stop the comet from hitting the earth, right? It's not that catastrophic, but it just in terms of the analogy, right? You really
Yeah.
do need to be aggressive, right? The passive approach is just all you're doing is delaying the inevitable,
Well,
right?
that's
Like
I mean, isn't that why Powell pulled back the narrative as we approach these debt ceiling talks? He pulled back the narrative of transparency and this is what we're going to do and this is what our forward thoughts are because the outcome of this is either he is going to have to pause rates. There are two extremes available to him. he'll either have to pause rates as an answer to a technical default, or he'll have to greatly increase rates as an answer to the Treasury getting its hands on more money.
Yeah, rock in a hard place, really. I
Yeah.
mean, he practically would even have to ease rates if there's a technical default. I mean, he probably would have to take some drastic measures to try to stabilize liquidity.
I mean, you'd probably have to take congressional measures to stabilize liquidity.
That's true.
I don't
Yeah,
think
that's
Powell
not
really.
quick.
I mean, Powell could. Me and you discussed the hypothetical in the past. Powell theoretically could raise interest rates very, very high for an extremely short period of time, and prevent by clearing the market of liquidity almost entirely, prevent a worse scenario. But quantitatively tightening that rapidly, could have some very serious long-term effects that can't be forecasted. But theoretically, if he could do it for less than 30 days before the Treasury has to pay out in a debt a second time, yeah, that could be
Crazy shit.
a response.
That's not gonna. I
It
think
wouldn't be
that
like a
things aren't.
2% increase. It would be like Volcker. It would be like 10% for like 28 days.
I don't think things are crazy enough to warrant that sort of behavior. I think. I mean, hindsight's 2020. If you started hiking by 10 basis points at the beginning of 2021, we would have avoided this entire mess.
I mean, if he'd
But
just done 5% federal funds rate up front, we probably wouldn't be in this mess at all.
yeah, I mean, something like that. But at this point, his choices, like he's especially with the narrative they're spinning, he is forced into a very slow moving position where either it's literally his two choices from now until there's a bottom in the economy are hike a little bit or don't hike.
Yeah.
That's all he's got unless something materially changes. Like the default could cause something, right? But we will just assume it's going to go through for whatever reason. And his response to that probably will be raising interest rates, possibly a pause. I doubt it. Right, the pause narrative will be pushed by the mainstream media as equities drop because of the liquidity drying up. But he's either going to pause or go 0.25, and unless
Sweet
anything material
inertia.
doing that, it's called additional firming for a reason.
Yeah.
He's calling it firming now. It's no longer raising rates; it's policy firming.
Yeah.
What the fuck
As
that means?
needed.
Yeah,
As needed.
as needed. Yeah, which it's needed.
Yeah. Smart people would know the move would have to be temporary. Firms would just push issuance until the hike downturns. Yeah, I agree. Although he could just drag it on a little longer and create like real wealth destruction, which would be dope. But it'll never happen.
Yeah,
It's still fun to think about.
So maybe instead of a 2% hike, what if instead he just dumps all the distressed assets? What about that
Fuck,
instead?
that's way worse.
I know, right? But it fixes a large amount of the problem immediately.
Yeah, but
I
you
mean,
also get major bank failure. I mean, there's no way one of the major banks doesn't fail there.
that's true. Yeah, and yeah,
And
I
then the
see.
FDIC's got to clean up the fucking mess. And then you're back to the same place, right? The Treasury needs to fill up their coffers to save the FDIC.
God damn it!
It's all connected, man.
It's such a complex situation. This is why I don't envy Janet Yellen or Jay Powell with their jobs, and I don't think anybody does. Nobody wants their job because it's so messy and convoluted. And like even just gaming these out, you start to realize that they really are stuck moving way slower than they should be
They
because if
know
they
it
move,
too. Like it's not that they don't know that they should be moving faster. I think there's probably some regret that they didn't attack it immediately. But at the time, they needed markets to recover. So what were they going to do? Destabilize the market after its COVID recovery? that would have been equally as bad now as, you know, destabilizing it now. There's no good answer. You're just trying to choose the best of a bunch of really bad outcomes.
Yeah, I think the best outcome would have been maybe not cock rocketing the economy straight out of the pandemic like the day
I mean,
after March.
I don't think that they thought that the people would be so irresponsible, right? Like,
after 2008, how could you not? How could you believe that they wouldn't be
they
irresponsible?
relied
Like,
on the systems put in place after 2008 to protect them from over speculation again, and over speculation happened regardless. It should always, right? This is the problem with everyone brown nosing Keynes, right?
yeah, it's an inevitability of human nature for speculation. I mean, it's like speculation is just a fancy way of saying being greedy with your investments.
Yeah.
So like,
I mean, how would they have known that, like, you know, stimulus checks issued to the general American public would get YOLO'd primarily into meme stocks, right? Like, I mean, there were so many
You're right.
things that came about that could not have been expected, right? You know, they expected that money to go towards food and, you know, like durables and consumer non-durables, and, you know, maybe promote some growth, at least promote the idea of stabilization.
Well, then, but the thing was on top of that, what they did was they also pretty much gave you 100% on your unemployment, like 100% of your income on unemployment, and the child tax credits, right?
Yeah, yeah.
And like they stimulated on the stimulation with the stimulation. Like it was so much stimulation that those stimulus checks, like unless you were really struggling, those stimulus checks, yeah, like people just had walking around money, and that's what caused the economy to fucking cockrocket. Like,
Yeah.
it
God
should have been
forbid
one or the other.
Americans have a livable wage for 6 months. Look how you ruined everything. But no, I mean, in reality, you know, as much fun as it is to go, the easy answer is like blame Reddit, right? Like NW said. But it's not, right? It's, you know, we're investing tiny amounts of capital relative, but to larger flows in the market. But, you know, then you have every systemic fund getting on the back of that and pumping it even higher, right? And then you
And not
have, you
only
know, the
that,
big funds are like, oh shit, we need to get more equity in this because it's going up. And you get these like runaway things like Tesla and Nvidia, where their fucking valuation so far exceeds any standard metric, right? um and they can only collapse, right? But then everybody's invested in them, so their interest is in keeping them elevated.
yeah, and it's not only that too, but like like we were just discussing earlier with Jay Fresh and Poopy Pants, like the what portfolio thing too. A lot of people who didn't go buy stocks with their money and didn't spend it on things they needed, they just put it in their savings account, and we all know how that ended up with some of these banks, right? Like, the bank deposits fucking skyrocketed. You look at M2, like it just popped up like a motherfucker out of like just out of the blue, and that right there, especially with the amount of economic stimulus flowing in, not only to individual Americans but to large corporations, that encouraged very strongly a risk on shift, right?
Yeah.
And like that, and that's kind of where a lot of the systemic
Well, it's
risk.
FOMO, right? It's just FOMO. It's just everyone thinks that like institutions are impervious to that. They're not.
Well, especially when your deposits go up fucking like 15% and your reserve requirement went to zero. Like
Yeah. I mean,
the
like look at
incentives were gone.
SVB's history. They had no idea what to do with all the fucking money coming in. I mean,
Yeah,
they were just like, I guess we'll buy treasuries, you know, unfucking hedged at 1%, right? But
yeah, fucking
like,
idiots.
yeah, I mean, but like, they had to do something with it, you know.
Yeah, you have to. It's
And
your
they are
fiduciary
limited. They
duty.
are limited as a bank in their selection of securities they can purchase.
Yeah,
The
but
best
it's their.
investment was buying a house at 2.5% mortgage. Well, until that house loses half its value.
Yeah,
And
that's.
then stays that way for some significant period of time. There's another side to the housing market that has not yet been realized, and it will be.
Yeah, there's a lot of inventory. Like if you look at like our total housing inventory is like 600,000 homes for sale, and then there's like 10 million homes that are vacant but owned, and then there's like 60 million or something homes that are owned, right? So
And of
like
those
the
60 million homes that are owned, there's probably about 20 million of them that are owned by institutions that may or may
yeah,
not default on massive credit obligations over the next 5 years.
yeah, I mean, and like and not only that, but home builders are like we saw the housing like the building permits and stuff. Like
Mm-hmm.
home builders are hard at work right now to undercut these motherfuckers in this super liquid market. They're like, you know what we're gonna
Yeah,
do?
yeah.
We can especially
Costs of lumber and materials are way the fuck down. You can buy
yeah,
land, build a house on it, and sell it, and still undercut the local market by like 20%,
yeah,
while
it's a massive
retaining like
arbitrage.
30% profits on the build. And that's
Yeah,
happening
like
everywhere right now.
even with high interest rates, you can as a home builder with these high interest rates, you can still profit massively on these properties. Like it's an arbitrage. It's a big one too. Like these home builders are gonna like probably make a fucking mint for the first like 6 months they do this before everyone panics and sells their shit or
Yep.
unemployment spikes, right? Like they're gonna make a lot of money.
And
And
the
not only that,
bigger
they're
home
built
builders
like
will profit the most.
yeah, like Lennar, yeah, they'll make
Yeah.
a bunch of money.
Because
Like but
they already have the supply chain set up.
and at the expense of everybody who bought from 2021 to now. They're all
2020,
gonna, yeah,
2019 to now.
yeah, I guess so, huh? Like it's and the like once people are already underwater on their auto loans for the most part. Oh, you're pretty much like you should pretty much assume you're going to be underwater the moment you drive off the lot.
Yeah,
Um,
I mean auto loans are they're I don't think they're as big a deal as you want them to be, but they have gotten excessive.
yeah, they're huge, dude. Like the auto ABS market has grown very rapidly.
Yeah.
I don't know if it presents a systemic risk, but it's just it's one of the two big
Probably
waves
less
that
of one
contribute.
because it's so easy to turn the asset itself around in the event of a default, right? Whereas like homes are not easy to turn around in the event of a default, right? Like you have to go through the whole foreclosure process, which legally can be drawn out for quite some time.
Yeah,
Whereas you know
there's a
a
lot of
car, you just repossess it, you sell it at auction like a week later. You know, you bag your loss and you move on.
yeah, it's true. The auto market has way more liquidity, so you're right. But yeah,
I mean,
I
don't get
think
me
that there's
wrong. Massive repossession auctions are going to drive down the price of new and used cars
yeah.
significantly.
Well,
But
that's why I've been repeating myself that the assets are still like they haven't been repriced at all. Like that's why I don't get why people are saying we're like this is the bottom of the economy. Like we haven't even seen an asset repricing a little bit in autos, but they're still at massively inflated values. Like it's just we haven't even seen any type of a bottom in the asset pricing. Like
a
that's why it
sixty-five
makes
percent drop in current asking prices on houses might be a little excessive, Gen, unless your market's super bloated. But maybe 30, 40%.
well where I live, kind of close to the no, not kind of close, but close enough that the gigafactory workers live sort of nearby. If Tesla decides that they want to close the gigafactory or reduce their workforce by a significant amount, you know, I might see a probably close to like 35% drawdown in home prices. But if you're out in bumfuck where like in the middle of the deep south or something where there's not really any sort of industrial work, I mean,
I think that's where the CMBS uh potential default is going to play the biggest role, is reshaping where our prime housing markets are. Large scale I mean, people move places because of the businesses there, and the, you know, if those start closing and failing, you know,
economic opportunity.
yeah, not only do you lose local jobs, which is a big factor, but you know, you also lose the desirability of the area. Um, and that can greatly reshape where our you look at like the Bay Area and New York and its suburbs, into New Jersey, and people all move to these places to work in a central area, right, where the economic opportunity existed. And if that economic opportunity no longer exists there, people are going to move other places.
Yeah. No. Long story short, bearish.
Yeah. Yeah, that's
Bears all
how
the
do
way
we
down,
always
man.
end up at that conclusion? Anyway, let's we'll see what happens this week. Obviously, SLD is not over yet. There's definitely gonna be some repositioning in the early part of this week. We do have some pretty big economic data coming out Friday, Wednesday with FOMC, and PMI in the early part of the week. Tomorrow is probably going to be the most open-ended day. I still think there's a chance that we return to see 4,200 at some point. There is positioning trapped there, but ultimately I would say that the bullish push for higher prices has ended yet again in moderate failure. So hopefully that sees a pullback to our previous levels, if not lower, over the course of like SLD settlement. Remember, as always, any significant drawdown can be met with significant bounces as short positions capitulate. So if you do hit profitability on puts, make sure that you have stops and a risk management strategy in place, because it can turn around. You don't want to lose the gains that you waited so long for. And I guess that's about it. Thanks for coming on, Dork. I know JFresh isn't here, but thanks, man. I didn't get a chance to thank you for coming on earlier. I will see you guys all tomorrow morning, and I'll throw up the pickles picks tonight. Thanks for hanging out, guys. I'll see you later. Bye, Dork.
Everybody. Bye-bye.